We're now solving question number 1A from our model test paper number 1. This question is on accounting standard 13, which deals with investment accounting. To begin with, Innovative Garments Manufacturing Company Limited invested in shares of another company. That's an investment. They have surplus money from their garments business that they've invested on 1st of October 2022 at a cost of 2 lakh 50. Along with this, they've also purchased some gold and silver. See, 2 lakh 50 is cost of shares, 4 lakh rupees is cost of gold, 2 lakh rupees is cost of silver. They purchased shares on 1st of October, gold and silver on 1st of March 2020. Market value on 31st of March for all the three investments are given here. What is it that they want us to do with this information? How above investments will be shown in the books of accounts of Innovative Garments Manufacturing Company Limited for the year ending 31st March 2023 as per provisions of Accounting Standard 30 Investment Accounting. Whenever you have such a question, I told you in the past that you need to always start with a line based on Accounting Standard 30. Tell what is that it tells. Then compare it with the information that's given here and give your conclusion. As per Accounting Standard 13, shares is an investment if it is intended to be held for a period less than 1 year. It will be called as short term investments or current investments. Short term or current investments will be valued at what value? Short term or current investments will be valued at cost or fair value, whichever is less. If fair value is given, we'll consider fair value. If fair value is not given, market price and fair value can be assumed to be same. Nextly, whenever we have gold or silver, it is also to be checked whether it is expected to be held for longer or short term. Complete shares. If shares are intended to be held for a period longer than 1 year, if you expect to hold it for, we are not talking about the actual period of holding, we are talking about the intended period of holding. If you intend to hold it for a period longer than 1 year, then it becomes long term investments. Long term or non current investments will be valued by cost. It will not be valued at NRV or market price or fair value. It will be continued to be valued at cost unless such decrease in the price of such investment is not temporary. That is permanent in nature. This is what standard says. If shares are intended to be held for a period less than a year, it is short term or current investments. If shares are intended to be held for a period longer than a year, it is long term or current investments. Sorry, non current investments. If it is current investment, it should be valued at cost or fair value, whichever is less. If it is non current investments, it should be valued at cost unless such decrease in the price of such long term investments is not temporary, that is permanent in nature. Same applies to gold and silver also. Unless they mention, we will always assume that gold and silver, whatever is bought, is not current. It is expected to be held for a period longer than a year. So if you make this assumption, otherwise assumption is also allowed. Can you make an assumption that gold and silver is bought with an intention to be sold for a shorter term? Yeah. In our case, firstly they mentioned that it is bought in 2020. Right now we're in 2023. 3 years is over. But actually we don't consider the past. We consider the future. We are assuming that they are intending to hold it for a longer. Alternative assumption is also valid. This will be considered as long term, that is non current investments. Because it is long term or non current investments, this will be valued at cost unless that decrease is permanent, that is not temporary in nature. I hope everybody understood this part. Make some noise. Yes. Very nice, very nice. So they've given us the cost of the investments. Shares were bought at the cost of 2 lakh 50. I will write shares 2 lakh 50 is the cost. And gold and silver. Gold 4 lakh, silver 2 lakh. Gold 4 lakh, silver 2 lakh. And market price. They've given us that the share market price is 2 lakh 25. Am I right? Market price is 2 lakh 25. Gold and silver 6 lakh and 3 lakh 50. 6 lakh and 3 lakh 50. But however, gold and silver, because it is considered to be long term, it will be valued at 4 lakh and 2 lakh original cost only. It will not be revalued. If you want, you can still mention here 6 lakh and 3 lakh 50. But what is it that will be considered for valuation of gold and silver because they are considered to be non-current investments? Cost. However, when you come to shares, no, 2 lakh 25, I can assume it to be short-term investments. So, or current investments. When I assume it to be current or short-term, then it will be valued at cost or market price, whichever is less, which is 225. Alternatively, if I assume it to be long-term investments with an intended period of holding for longer than 12 months, then it will be valued at cost unless it decrease from 2 lakh 50 to 2 lakh 25 is permanent in future. Throughout, I want you to focus on one important point. For gold and silver, I assumed it to be long term. Alternative assumption, is it valid? Yeah. Unless otherwise mentioned, I've assumed it to be long term. Alternatively, it can be assumed to be short term. Usually, that's not the case. And this is the answer, my friend. I've written it in the form of a table, but actually a lot of people choose to write it in the form of statement. You can write as per accounting standard 13, investments in the form of shares should be treated as current investments or short term if the intended period of holding is less than 1 year. If the intended period of holding is more than one, it will be considered as long term. Shares other than shares, that is gold and silver, can be assumed to be investments held for a period longer than 1 year, otherwise mentioned, unless otherwise mentioned. And then you'll come to a point mentioning current investment should be valued at cost or fair value, whichever is less. Long term or non current investment should be valued at cost, unless that decrease in the price is not temporary or permanent in nature. In the present case, shares will be valued at cost or market price, whichever is less, which is 2 lakh 25 if it is short term investment. Otherwise, if it is considered as long term investment, it will be shown at the cost of 2 lakh. Because the assumption made in the following case is that gold and silver is long-term investment, it will be shown at the original cost of 4 lakh and 2 lakh. Full stop. That will be your theoretical answer. I hope everybody understood. Let's now solve question number 1B from our model test paper number 1. And this question is on accounting standard 19. Please start reading the question. Lessee Limited took a machine on lease from lessor. So lessee's name is lessee. Lesser's name is lesser. Asset on lease is machine. Fair value of the asset is 7 lakh. What do you mean by fair value? If in case you don't give it on lease, if you sell, then it will be sold at 7 lakh rupees. But it is given on lease. Lease means the asset will be given at the beginning, but the consideration will be received not at the end, not at the beginning, but throughout that period of lease. So it will be broken into smaller parts and then consideration will be collected. Person who's giving the asset is lesser, the person who's receiving the asset is lessee. Is codorally EE will be there. Then economic life of the asset is as well as the lease term is 3 years. So this is obviously finance lease. Why? 100% of the useful life of the asset is on lease only. So we can easily say that this asset is given on what lease? Finance lease. Then read further. At the end of each year, lessee limited has to pay 3 lakh rupees to lessor. What is this 3 lakh? Lease rental. Lessee pays 3 lakh rupees at the end of year 1, at the end of year 2, at the end of year 3 to lessor. For time being, you are lessee, I am lessor. I am collecting 3 lakh, 3 lakh, 3 lakh, 3 times. 3 lakh na 3 times collect madre. I have collected 9 lakh rupees from you. Am I right? Correct, no? Okay. Then at the end, you have promised to pay me 22,000. At the end of the lease, lessee has a right to buy the asset from the lessor. The price lesser than fair value. How much money will you give me? 22. So you will give me 3 lakh at the end of year 1, 3 lakh at the end of year 2, 3 lakh at the end of year 3, and again at the end of year 3, you will pay me 22,000. So total money that I'll collect from you as per the lease agreement is 3 lakh rupees into 3 years plus 22,000. 9 lakh 22,000. That is the minimum money that you have to pay, minimum money that I have to collect. We call it minimum lease payment. But this minimum lease payment of 9 lakh 22, I am not collecting today. If I would have collected full money today, I would have collected 7 lakh from you. It's a fair value. If we'll not call it lease, I am not lessor, you are not lessee. I am seller, you are buyer. We are not related. It's not a, there is no undue influence, there is no coercion. It's knowledgeable market. If I give the asset to you, how much money will you give? 7. But I'm not collecting 7. I'm collecting 3 at the end of year 1, 3 at the end of year 2, 3 at the end of year 3. Under 22 totally. So I'm collecting 9 lakh 22,000 from you. Am I collecting more than 7 lakh? That extra money what I'm collecting will be finance income to me. But let's not go there right now. Right now, all we are trying to focus is 9 lakh 22,000 is collected from you by me, but not today. It will be collected over 3 years. So I need to discount it to today's value. You know that minimum lease payment is 9 lakh 22. I'll find the present value of minimum lease payment. For that, we need some interest rate. We have given that estimate as per lesser residual value, you keep it aside. This nobody cares. However, according to me, how much is the value? 15. If according to me, the residual value is more than 22, then there was unguaranteed residual value. How much have you promised to pay? If I was expecting 30, then 22 you have guaranteed, 8 you have not guaranteed, but I'm still expecting. That would have become unguaranteed residual value. You are giving 22. I was expecting only 15. I am happy. Ignore that 15. Don't write that 15 anywhere. If you write that 15 anywhere, your answer will go wrong. They're trying to make you go wrong. Intentionally, they plotted that 15 there. Don't take that 15. Ignore it. What if that was 30? Then 8,000 would have been unguaranteed residual value. That would have been O and O MLP to find gross investment, but that's not needed here. Implicit rate of return is how much? Very good. IRR is 15. I need to discount the money that you will pay at 15%. I don't even have to do 1 by 1.15. Why? They only told ya 0.869, 0.756, 0.657 at the end of year 1, 2, and 3. You got it? I can take annuity factor also. Why? 3 lakh is the same amount. No, consecutive and constant. Constant means first year 3 lakh, second year 3 lakh, third year 3 lakh. Constant. Consecutive between first and second installment, time period 1 year. Because between second and third installment, time period 1 year. So it is constant and consecutive. So I can take annuity factor. Let me see what is asked in the question. Calculate value of the machinery. Machinery has to be recorded by whom as an asset? You. You. Who are you? Let's see. You should record the asset at what value? Should record the asset at present value of MLP or fair value, whichever is less. Money that you should pay 9 lakh 22 at present value. You should record the asset at that value. Or you should record it at 7 lakh, whichever is. What if the present value comes to 8 lakh? 8 lakh you might have to pay, but asset is 7 lakh ಸಿಗ್ತಾ ಇತ್ತಲ್ವಾ if you would have paid cash. If you record it at 8 lakh, then you're recording interest into the cost of the asset, which is not allowed as per AS 16. Am I right? Unless that asset is a qualifying asset. You agree? So you should record the asset at present value of MLP or fair value, whichever is less. We right now know fair value, but cash flows we know. We should find the present value, compare, and then record the asset. Whatever value you record the asset, same value would have to record the liability. And we should find finance charges for you, interest expense. After you identify that, write it and then start computing interest at 15% for each year, deducting 3 lakh lease payments. You will get the answer. Shall I show how is it solved? Observe. Lessee name is Lessee Limited. Lesser name is Lesser Limited. Leased asset machinery, fair value 7 lakh. Lease period 3 years. Lease rental 3 lakhs. Interest rate 15%. Guaranteed residual value 22,000. I wrote all the data required so that we don't have to go back to question. Here, 1, 2, 3. Lease rental 3 lakh. How much? 3 lakh. I'll find the annuity factor. They've given it 0.869 and 0.756. Beda. Adikkinda munche I'll write third year guaranteed residual value 22. And I'll find MLP 3 lakh into 3 plus 22. Don't write 3 lakh 22, please. If you want, I'll write 3 lakh, 3 lakh, 3 lakh 3 times. If you don't write it 3 times, remember 3 lakh into 3 plus 22. Got it? This, then, come here. Take total 0.869 plus 0.756 plus 0.657. 2.282. Multiply 3 lakh with 2.282. 6,84,600. 22,000 ಗೆ 0.657 is the present value factor at 15% for 3 years. 14,454. Take the total 6,99,054. So observe, present value of the minimum lease payment is 6,99,054. All the money that you should pay, no, its present value is so much. What is the fair value of the machine? You should record the asset at whichever is less, which is 6,99,054. Easy. Then we would have to find the finance charges. Do you pay 6,99,054? No. How much do you pay? 9,22,000. Difference is your interest expense. Difference is your, it should go to PL. It should go to, that can be capitalized only if the asset is qualifying asset as per AS 16. But we don't have that information here. Nor do we have any question which overlaps 16 with 19. So you understand, no? 6,99,054 is the value of the asset and value of liability. But you actually pay 9,22,000. Difference is your interest expense. We need to identify not interest expense in total, interest expense for each year. How do we do it? Very simple, yeah. Year 1, your liability is recorded at 699,054. Why? Because you record asset at 699,054. Liability also will be recorded at 699,054. If you would want, I would mention the journal entry here. You would write leased asset debit to lease liability account. How much is your leased asset? 6,99,054. This is the entry. Am I right? 699,054 is your liability. Do you pay that on year 1 beginning? No, you pay little money at the end of year. So because you did not pay the entire money, I will charge interest at 15%. Please do 699,054 into 15%. You get 1,04,858. Then lease rental will be paid. How much is lease rental? 3 lakhs. Deduct 3 lakhs. Deduct 3 lakhs. Do 699,054 plus 1,04,858 minus 3 lakhs lease rental. 5,03,912 is the closing outstanding liability. Year 2 get 5,03,912 is the opening outstanding liability. Add interest at 15%. 75,587. Deduct 3 lakh rupees lease rental. Third year opening will be 279,499. 1 second. Don't do 15%. 100 rupees or 15 rupees or some amount difference would come. So write 3 lakh here. You should get 20,000 here. Now identify this as balancing figure. If you do 279,499 into 15%, how much do we get? You get 41,925. That is because 600 rupees rounding off error. So write it as 42,501 so that you get the closing liability as 22,000. And your total interest should match with the difference between present value of MLP and MLP. Did you understand? We've identified finance charges for each year. We've identified the value of the asset as well as the value at which liability has to be recorded. And this, my friends, is the answer to question 1B from our model test paper 1 on accounting standard 19. We'll now solve question number 1C from our model test paper number 1. This question is on accounting standard 28, which talks about impairment of assets. Let's begin. X Limited purchased a property, plant and equipment 4 years ago for rupees 150 lakhs. So whatever is happening now is happening after 4 years. 150 lakh was the price 4 years ago. So this asset of 150 lakhs has to be depreciated for 4 years and then we would have to do whatever we need to do. But I can't tell you the amount of depreciation right now because we only know 150 lakhs. We don't know scrap value, we don't know rate of depreciation and everything. They've told depreciation is at 10% SLN. Wow, so nice. Do 150 lakh into 10%? 15 lakh per year. How many years? 4 years. Do 15 lakh into 4? 60 lakhs. From 150 lakhs, we will deduct depreciation of tax. It comes to 90. So the value of the asset at the time of purchase 4 years ago was 150 lakhs. Now after 4 years, we have depreciated it by 60 lakhs, bringing the value to 90 lakhs. At the end of 4th year, yeah, that's exactly where we are. It was revalued to 75. It was 90. Do you all agree with me? It has become 75. 90 is here, 75 is here. From 90, if you bring it to 75, can you say it is downward revaluation? On downward revaluation, asset account will be credited. Debit will be P&L. Debit will be. We've learned in accounting standard 10 that downward revaluation of the asset should be charged to P&L unless it is not downward but reversal of upward. Meaning previously the asset was revalued upward, now we are doing downward, then to the extent it was previously upward revalued and revaluation reserve is allowable, we should have credited we should have reversed that revaluation reserve, debited revaluation reserve. But is this asset revalued upwards anywhere? No. We told 4 years ago we purchased. Now 4 years later we are doing downward revaluation. So there is no concept of reversal of upward revaluation. So asset original cost 150 lakhs. depreciated by 60, brought to 90, revalued to 75. Difference of 15 lakhs is not impairment loss. Difference of 15 lakhs is downward revaluation which should be charged to P&L. Everyone understood? When I do this downward revaluation, what is the value of my asset? 75 lakhs. Everybody understood? 75 lakhs. At this stage, do I have any revaluation reserve with me? No. It is downward revaluation. It has been transferred to P&L. Read further. Further, written off loss on revaluation to P&L. That also you don't have to think. That also they only told in the question. Not a difficult one. However, on the date of revaluation, market price is 67.5. Market value of the asset is how much? 67.5. This is NSP. Very good. Net selling price. See, net selling price can be lower than the cost. We don't really care. We don't do impairment of the asset just like that casually one fine evening we are put in ಮಾಡೋದು ಬೇಜಾರಾಗ್ತದೆ ಬನ್ನಿ impairment ಮಾಡೋಣ. No, we cannot do like that. In order to do impairment, there should be indicator for impairment. Is there any indicator here? No. If there is no indicator, then we don't have to do impairment. 4 marks will not be given to us. Why will they give 4 marks? They are meaning to say that there is an indicator and we need to check for impairment. So that is the assumption based on which this question is solved. And they told expected disposal cost is 3 lakh. What is it? To sell the asset, you will incur cost of 3 lakh. Andre, this 67.5 is actually not NSP. It is SP. Sale proceeds or selling price. Net selling price is sale price minus selling expenses. Sale price minus selling expenses. To get 67.5 lakh as sale consideration, I have to pay cost of 3 lakh. Take 67.5 in the calculator, deduct 3 lakh, 64.5 is NSP. I am assuming value in use is 0. Recoverable amount of an asset is value in use or net selling price, whichever is higher. If I use the asset, how much money will I get? If I sell the asset, how much money will I get? Better of those will be the money that I can get from the asset. That will be compared with the carrying amount. Higher of value in use and recoverable, higher of value in use and net selling price will become recoverable amount. Do you agree with me? If in case the recoverable amount is lesser than carrying amount, then there is impairment loss. If the recoverable amount is more than carrying amount, then there is no impairment loss. Carrying amount of the asset is 75 after the downward revaluation. For recoverable amount, we need to compare value in use and net selling price. Value in use is not given. Oh, they've given later. Right now, net selling price is 67.5 minus 3, 64.5. What will be the treatment in respect of impairment loss on the basis of fair value for revaluation purpose if determined that market value and value in use is 60? So I'll take this 63 now. 64.5 or 60, whichever is higher. 64.5 will become my recoverable amount. That will be compared with 75. 75 and 64.5. 10.5 will be impairment loss. What will be treatment of impairment loss? You remember loaded gun? Impairment loss should be reduced from the asset, charged to P&L. Whenever you are reducing it from the asset, before you shoot the asset, who will come? Goodwill. In this case, there is no goodwill. This impairment loss will be transferred to P&L. Before we transfer to P&L, who will come to save? Revaluation reserve. If the asset was revalued, then there would have been revaluation reserve. That 10.5 lakhs of impairment loss before we transfer to P&L, we would have been adjusting against that revaluation reserve. If full 10.5 revaluation reserve was there, fully adjusted against revaluation reserve, not transferred to P&L. However, let's say revaluation reserve was there to the extent of 5 lakhs. Out of 10.5 lakhs of impairment loss, 5 lakhs of revaluation reserve would have been check. Balance 5.5 would have been transferred to P&L. But here there is no such case. That's the answer. Easy. I'll explain it step by step. Please have a look. To begin with, 4 years ago, அந்த காலத்திலே 4 வருஷಗಳ முன்னாடி 4 வருஷம் முன்னாடி பின்னாடினோ பின்னாடி மீன்ஸ் ஃப்ரண்ட் 4 years ago means பின்னாடினோ என்னம்மா இது உங்களுக்கு தமிழ் வராது எங்களுக்கு தமிழ் வராது ஓகே உங்களுக்கு வருமா ஓகே உங்களுக்கு தமிழ் வரும் எங்களுக்கு தமிழ் வராது cost of the asset 4 years ago was 150 lakhs. Now we'll deduct depreciation at 10% for 4 years. 150 lakh into 10% into 4 years, it comes to 60. If I depreciate it, it will come to 90. This is written down value. This is revalued to 75. From 90, if it has to come to 75, I should deduct 15. This will be downward revaluation and this is transferred to P&L account. This is transferred to, if it was upward, it would have been kept to revaluation reserve. Now, here I am comparing it, this revalued carrying amount. This is, what is this? Sir, 9C answer, seat number. Allah, Allah, Allah. Carrying amount. Carrying amount is 75. I'll compare it with recoverable amount. Recoverable amount is higher of two things. One, value in use. Two, net selling price. Value in use, they've given in the question in the last line as 60 lakhs. What is net selling price? 67.5 is sale proceeds, 3 lakhs is cost of disposal. So I will do fair value of 67.5 minus disposal cost of 3, it will come to 64.5. Higher of them is 64.5. So 75 is the carrying amount. It can recover as only 64.5. The difference 10.5, whatever is there, transfer to impairment loss. Sorry, that should be impairment loss. Impairment loss, before it is transferred to P&L, it should be adjusted against revaluation reserve. In this case, the asset which is impaired was never previously upward revalued. So there was no concept of upward revaluation, there is no concept of revaluation reserve. So entire impairment loss will be charged to P&L account as there is no revaluation reserve. This, my friends, is the answer. Let's now solve question number 2 from our model test paper number 1. This question number 2 is from the chapter of financial statements, schedule 3 financial statements point for a company. From the trial balance of Delta Limited as on 31st of March 2003, what are we supposed to do? Don't read the trial balance, come to the end. They have given some additional information, come to the end. You are required to prepare Delta Limited's balance sheet. Okay. As on 31st of March 2023. Also, you are required to prepare statement of profit or loss. Whenever you need to prepare balance sheet and PL, we know that unless until we close P&L, we will not be able to close our balance sheet. Only when we find net profit in our statement of profit or loss, that will go to reserves and surplus in our balance sheets notes to account. Then balance sheet will get closed. But in the presentation, always you have to write balance sheet first. In the class also, we always learn balance sheet first. So first balance sheet format, then statement of profit or loss format, then there will be notes to accounts for balance sheet and finally notes to accounts for statement of profit or loss. This is the order. I want you to remember this. Shall we start? Recall how we did this topic. We read the adjustments and we made small marking in the trial balance for the items with adjustments. Then we proceeded from the trial balance and posted them to the respective notes to accounts. We did not close any notes to accounts. Once we finished the entire trial balance, then we read each adjustment one after the other, made posting for that respective adjustment in that notes to accounts. Then when the entire question is over, then we closed all the notes to accounts in the order, posted them to respective financial statement, maybe balance sheet or P&L. Then we closed our statement of profit or loss, took the net profit, put it to reserves and surplus, close that, and then put it to balance sheet, and then our balance sheet. Remember, this part of that video you cannot skip. You would have to listen to what I told once, and this is the order that we'll follow always when we do statement of profit or loss and balance sheet in financial statements of company's topic. Read the first adjustment. Authorized share capital of the company is 80,000 shares of rupees 10 each. Why have they given this? This is to be disclosed in notes to accounts for share capital. Come here. On the credit side, do you have equity share capital? Yes. Make a small marking. You can keep a small chuki dot in your question paper. You cannot highlight it completely and tick it. Keep a small dot saying that for this we have to open notes to accounts. When we open notes to accounts, we are going to disclose that authorized capital. First adjustment done. Come to second adjustment. Company revalued the land at 9 lakh 60. Okay. We don't even have to read it completely. There is going to be revaluation for land. We'll open one notes to accounts for property, plant, and equipment. In that, we'll write original cost one column, revaluation one column. Then I'll write accumulated depreciation at the beginning, depreciation for the year, closing accumulated depreciation, and the closing balance. However, we won't have so many adjustments. Moreover, for land, though, no depreciation. Am I right? Okay. Identify land on the balance sheet and this trial balance asset side. Land at cost. I'll just make a small marking on this, stating that this has to be adjusted for. We need to revalue this. Got it? What do we have after this? Equity share capital includes shares of rupees 50,000 issued for consideration other than cash. So whenever shares have been issued for a consideration other than cash, this needs to be disclosed separately. So this item of share capital, which is already underlined, we can put one more dot next to it stating that this has two adjustments. When we open notes to accounts for share capital, number one will disclose authorized capital. Number two, after we write share capital, below that I will mention that certain number of shares are issued for non-cash consideration. Maybe that's conversion of debentures to equity shares, maybe bonus issue, or maybe an asset purchase also. We don't really know. What do we have after that? Come to fourth adjustment. Suspense account. Oh, there is some suspense of 10,000 represents cash received for the purpose of sale of machinery. Oh, here we have suspense 10,000. 10,000? Yeah. So this is asset is sold and the cash is received. When the asset is sold, what is the journal entry? Cash account debit to asset. They will written cash account debit. Credit ಏನು ಬರಿಬೇಕು ಗೊತ್ತಿಲ್ಲ. They will left it like that. That missing credit became suspense. Credit should have been very good. Our machinery should be reduced. On the assets debit here, you have plant and machinery, no 824. From this 824, I have to deduct 10,000, not 10,000. 10,000 is sale consideration. I have to deduct the cost of the assets sold. 10,000 is sale consideration, no. Cash account debit 10 to asset that should have been credited at 12. Difference would have become profit or loss on sale. They've done cash account debit 10. Credit, they did not know what to write, they left it blank. Everybody got it? Come on, let's go to the next item. I'll only identify the items which has adjustment and then mark them. I'll read these adjustments in detail later. They told the asset was bought for 24,000, accumulated depreciation is 20. This is helping us identify profit or loss. Yeah, I'll read this later, but I can do it now. Cost is 24. Am I right? Accumulated depreciation is 20. 24,000 cost, 20,000 accumulated depreciation. If you deduct, we get carrying amount of 4,000. 4,000 rupees is the carrying amount or value. Sold for 10. 6,000 rupees. 6,000 rupees. That's it. 6,000 should be written in other income. Asset should be reduced by 824. How much should I reduce? 24. Accumulated depreciation on this should be there somewhere. Where is it? We have somewhere here provision for depreciation. From this 150, I'll eliminate 20. 24,000 rupees worth of original cost of asset with accumulated depreciation of 20. 24 I will eliminate from plant and machinery original cost. 20 I'll reduce from provision for depreciation. 10,000 is already added to cash. 6,000 rupees of profit? No. 6,000 profit will be written in other income. That's it. Easy. I'll teach you slowly later. We'll read the adjustment. Right now, we're not solving the adjustment. I'm only making marking for items in trial balance which have adjustment. Very nice. Then we have depreciation is to be provided at 10%. Hey, careful, yeah. This depreciation 10%. By mistake, also don't provide on 824. In 824, 24 damar. Remaining 800. On 800, 10% depreciation. 80. Opening depreciation was 150. In the 20 damar. 20 is asset sold, no? 150 ಅಲ್ಲಿ, how much will be depreciation after that asset disposal? 130. One current year depreciation 80. 210 will be closing depreciation. So I'll open notes to accounts for property, plant and equipment. 824 minus 24, 800. 150 minus 20, 130. Further depreciation, I'll add depreciation only to accumulated depreciation, not to asset. And then I get accumulated depreciation as 130 plus 80, 210. 210 will be deducted from 800 to find the closing carrying amount, which will come in our note to accounts. From note to accounts, we will go to balance sheet. You understood? That current year depreciation 80 will be there, no? That will also appear in our statement of profit or loss as depreciation and amortization expense. Got it? Then any other adjustment that we have? Balance at bank includes 5,000 rupees with ABC Bank. ABC Bank ಅಂದ್ರೆ ಯಾವುದು ಆಟಕ್ಕುಂಟು ಲೆಕ್ಕಕ್ಕಿಲ್ಲ ಬ್ಯಾಂಕ್ ತರ ಇದೆ. A for apple, B for ball, C for cat bank, which is not a scheduled bank. It is not a what to do. Disclose separately. When you open notes to accounts for cash and cash equivalent, we have cash of 28. In this 28, how much is it in unscheduled bank? 5,000. We'll disclose 5,000 separately, 23,000 separately. That's it. No big deal. Make provision for income tax 30%. Where would you write this provision for income tax? Statement of profit or loss, and further this will appear as short-term provision in my balance sheet. So in my profit and loss, in revenue from operation, other income, and then all of these consumption of raw material, changes in inventory, employee benefit expenses, depreciation, amortization, and finance cost to other expense will take total. Income minus expense will get profit. From that, I'll deduct 30% as income tax provision. And this is not paid. If it is paid, would have deducted from cash. Because it is not paid, this will be shown in my balance sheet in other, sorry, balance sheet in short term progress. Got it? Then receivables 50,000 are overdue for more than 6 months. Simple. In our trial balance debit side, you have trade receivables. In this 120, how much is due for more than 6 months? 50,000. So I will show 120 not as one single item. 50 due for more than 6 months. Balance due for less than 6 months. How much is balance? 50, 30, 70. 70 due for less than 6 months. 50 due for more than. So now we've gone 1, 2 through all the adjustments. I think we are ready to kickstart our answer. Shall we? चलिए शुरू से शुरू करते हैं. When we start from the beginning, land at cost. Where would this be appearing in my balance sheet? Property, plants, and equipment. When you're writing the answer, don't write the format. I have the format kept ready so that we'll save time. You, when you write, don't write the format. Leave first page completely for balance sheet. Blank you leave. Don't write anything. Second page you leave completely blank for P&L. In the third and fourth page, you do notes to accounts for balance sheet. Fifth and sixth page, you do notes to accounts for P&L. Fifth page will be notes to accounts for balance sheet liability side. Sixth page will be notes to accounts for balance sheet asset side. You understood? I'll repeat. First page, balance sheet format, leave it empty, don't write anything. Second page, P&L format, leave it empty, don't write anything. After first and second page is what? Third and fourth page is for balance sheet notes. Third page, liability side. Fourth page, asset side. Fifth page, incomes. Sixth page, expenses. Sir, incomes only two. It's okay. Page will not get wasted. Don't worry. Leave it like that. And in this fourth page, liability side, it's okay if it is shortage, we'll write the note at the end. You write notes to accounts without giving them serial number. Write everything. Later, when you're posting to balance sheet, number them serially. Or post them to balance sheet and then serially number them in balance sheet and then put the notes to accounts number. That way, it will be in the serial order. You understand? Don't waste time writing the entire format, though the items are not there in the balance sheet. Okay. So right now we know that there is an item called PPE. First page balance sheet, second page P&L, third page balance sheet liability side, fourth page balance sheet asset side. You will write notes to accounts. Shall we write tangible assets notes to accounts? Land at cost. I will write land. What is the cost of the land? 800. There is some adjustment. There is some revaluation. It is 800,000. So I've written it as 8 lakh. Sir, adjustment later. When I read the adjustments, I'll do it. Right now, no. Next, I have call scenarios. What to do with call scenarios? Call scenarios have to be reduced in share capital. This is page number 4, no? You come to page number 3, note number 1. Obviously, note number 1 will be share capital. Here, I'll leave little space for authorized capital. We know that it is there. Am I right? Then I'll write paid up capital. Sir, we don't know. I would have to write paid up capital. From paid up capital only, I'll reduce no call scenarios. Am I right? How much is call scenarios? 5,000. I will write call scenarios less 5,000. Then after call scenarios, I'll go to cash in hand. Cash in hand has no adjustment whatsoever. First page balance sheet, second page P&L. Third page liability side notes. Fourth page asset side notes to accounts is there. No, where one of the last notes to accounts is cash and cash equivalent. It is okay right after tangible assets if you write cash and cash equivalent, it is okay. Later when you number them, you number it serially. Jumble the notes to accounts, no problem. Don't jumble the numbers. Don't jumble the numbers. So I'll write in my cash and cash equivalent, cash in hand. How much is cash in hand? 2,000. Cash in hand? I don't think there is any problem also with cash in hand. Any problem? Any difficulty? Okay, come on. Let's go to the next item. What do we have after our cash in hand? ಕೈಯಲ್ಲಿ ಕಾಸು. ಇದೋನೇ boss. Plant and machinery at cost. PP. How much is it? 824. This has a lot of things. Yeah. Sale entry is not made. Accumulated depreciation has to be found for current year. I would write plant and machinery. Plant and machinery. 8,24,000 is the original. I'll keep it there and done. What's after that? Trade receivables 120. This has some adjustment. What is the adjustment? Some of it is outstanding for more than 6 months. Some of it is for less than 6 months. We'll adjust it later. For now, what do? In my trade receivables, I know that the total amount is 1,20,000. Split, we'll see later. Split, we'll see. But everyone understood 1,20,000. Am I right? What do we have after that? Then we have inventories. This is 31st of March 2023. On what date are we doing the balance sheet? 31st of March 2023. So can I say this 96 is actually closing stock? When they've given closing stock, they should have given it in adjustments. If by mistake also closing stock appears within trial balance, that means there is no space for opening stock, no? Opening stock plus purchases would have been written as adjusted purchases. If closing stock originally, when it is given in adjustment, should go to two places. What are the two places? Number one is balance sheet asset side inventory. Number two, statement of profit or loss, changes in inventory. But if closing stock is given in trial balance, take closing stock only to balance sheet. That changes in inventory, what we do in notes to accounts, profit and loss. It is already adjusted in adjusted purchases. We've done an AQ on this in our financial statements topic. If you have any tiny doubt on this, please do visit that once and then have a look today. You will get full clarity. Can I proceed? Now, where would I write this closing stock? Statement of profit or loss or balance sheet? Balance sheet inventory is 96. Actually, there is no need for notes to accounts on this. This can be written straight away to balance sheet only. There is no item adjustment. No. So, shall I write inventory straight away 96,000 in my balance sheet only assets line? If you are doing notes, you can write it in notes to accounts. If not, you can write it in balance sheet straight. I hope everybody got it. Then after that we have cash at bank. This has adjustment. What was that adjustment? ABC Limited Bank. Someone is in that unscheduled bank. So cash and cash equivalent. We already opened one notes to accounts. No, there I would write balance with bank. How much is it balance with bank? 28,000. But that has to be split. 28 plus 2 money. 30. Okay. 28 plus 2 is 30. Some money is with that scheduled bank, some money is with that unscheduled bank. That split has to be written. I think we'll write it later. Is that okay? Money with the scheduled bank and unscheduled bank, will write it later. What do we have after this? Adjusted purchases. Adjusted purchases is opening stock plus purchases minus closing stock. Opening stock plus purchases minus closing stock. So opening stock minus closing stock is changes in inventory. Purchase should appear as stock in trade. Purchase of stock in trade. In your statement of profit or loss, you should write purchase of stock in trade here and changes in inventory here. Changes in inventory is opening minus closing. This is purchases. Adjusted purchases is opening fixed purchase minus closing. It is same. This changes in inventory and purchase of stock in trade together will be called as what? Adjusted purchases, which we know right now. How much is adjusted purchases? 4 lakh. Everyone understood? Say something. It is both of them put together. There is an AQ that is being solved in the class on this topic. Please do refer that so that you get some understanding on this. If in case you have got it, then what do we have after this 4 lakh? Factory expenses 80. It doesn't matter whether it is factory expense or office expense. Expense at the end of the day is expense. Where would it go? Other expenses 80,000. Other expenses, I'll open one notes to account. First page balance sheet, second page P&L, third page liability side notes, fourth page asset side notes, fifth page income notes, sixth page expense notes. Lastly, factory expenses. How much? 80. Everyone understood 80? Then we have with us administration expenses, selling expenses. These two also will appear there only. There is no adjustments also. Administration expenses and selling expenses. ಮೇಲೆ administration ಕೆಳಗಡೆ selling expenses. How much administration expenses? Administration expenses is 45,000. How much is selling expenses? 25,000. Then what is 1 lakh? Don't write it right now. What if there is some other adjustment? So I told you not to close any notes to accounts. Keep the table open for totals. Then we have debenture interest of 30,000. Debenture interest is finance charges. By mistake, also don't write in other expenses. We don't have any other finance charges. I can write it straight away in my P&L. Or if you want, you can choose to write it. I've written here debenture interest 30,000 straight away in my statement of profit or loss. You can choose to open notes. That would not be incorrect. Then we have some items on the credit side. To begin with, equity share capital 500,000, which is basically 5 lakh rupees. This I'll write it in my notes to accounts. Liability side, share capital. How much is that paid up capital? 5. Am I right? So this will be written as 50,000 shares of rupees 10 each, 5 lakh. I'll deduct 5,000 call scenarios and make it 4 lakh 95. Sir, why that space? There is that shares for non-cash consideration. We read the adjustments once. You remember? We'll write it later. For now, let it be 4 lakh 95 like this. Then we have 10% debentures 300,000, which is 3 lakh. This is long term for. I don't think there is any adjustment, so I'll not open notes to accounts. If you want, you can open notes to accounts and write 10% debentures 3 lakh, or you can choose to write it straight away in the balance sheet also. Okay, done. What's after this 3 lakh? General reserve 1 lakh 50,000. Where do you write 1 lakh 50? These are surplus. But you have to open notes to accounts for reserves and surplus. Don't tell I'll adjust it straight. Why? Because after this general reserve, then we would also have some other reserves, or even if it is not there, profit would come and dividend adjustment can come. So please write it here 1 lakh 50,000. Is that okay? Say something. What do we have after general reserve of 1 lakh 50? P&L account balance is 75,000. This is opening balance. This is not the closing balance. Is this the opening balance or closing balance? Opening balance. So this opening balance, we need to add current year profit. Very nice. After I add current year profit, it will go to closing. I'll write 75,000. I will want to add current year profit, but I don't know current year profit. When will I get to know current year profit? When I close my statement of profit or loss. Till then, this will be pending like this. Everyone got this? Yes. What's after this 75,000? Then security premium 40. This is also a reason. I would write here security premium. How much? 40,000. This would go to order. Then we have sales. Sales is revenue from operation, P&L. So in my statement of profit or loss, I would write here revenue from operations. How much is it? 12 lakh. 1,200 thousands. 1,200 thousands is 1,200 followed by 3 zeros, which is 12 lakh. What would be adjustment against this if there is any sales return? That has to be deducted from this. Anyways, we don't have any because we have not highlighted it for adjustments. Trade payable 30, no adjustments. Straight away in the balance sheet, shall I write liability side trade payables? Sir, can I open notes to accounts? Yeah. Who's going to stop you? No one's going to stop. What's after this 30,000 trade payables? Next, I have with me provision for depreciation 1 lakh 50,000. This is on that plant and machinery. We had opened this notes to accounts previous, plant and machinery. Accumulated depreciation at the beginning is 1 lakh. There is one sale of machinery which is not recorded, which we will adjust, then provide for current year depreciation, then identify the closing accumulated depreciation, deduct it from the original cost, identify the closing WDV, that would go to balance sheet PP. So for now, wait. Got it? What do we have after this accumulated depreciation? After that, we have suspense of 10. Suspense of 10 needs to be adjusted. There is a clear adjustment given. For now, I will not write it. For now, I will not write this. Where will you write suspense? Suspense has to be eliminated, no? We found the reason also. We'll eliminate it. So I will not write it anywhere in the balance sheet. Then I have with me authorized capital. I'll make this disclosure. 80,000 shares of rupees 10 each. Where do I make the disclosure? Very good. In my share capital, I would write here authorized capital. 80,000 shares of rupees 10 each, 8 lakh. Got it? This will not be considered in the total. This will not be considered in the. So remember to draw 2 lines after you write that authorized capital. Okay. What's after that? Company revalued land to 9 lakh 60. What is the value of the land here? 8 lakh. It is revalued to 9 lakh 60. So how much is upward revaluation now? Not 9 lakh 60, 1 lakh 60, which will make the WDV 9 lakh 60. So depreciation, tell me where will you depreciate and how will you depreciate land? It will become one main content as land depreciation and here. So 8 lakh revalued upwards by 1 lakh 60, it will become 9 lakh 60. Remember, it's not like you write 1 lakh 60 and then forget. How do you increase the value of land? Land account is debited. Credit should be given to Very good. Where would that revaluation reserve appear? Reserves and surplus. In your reserves and surplus, here you have to mention revaluation reserve 9 lakh 60 minus 8 lakh, which comes to 1 lakh 60. Got it? Forgot this? Adjustments always remember you should make two postings. Huh? Double entry system. Equity share capital includes shares of rupees 50,000 issued for consideration other than cash. Only disclosure. In notes to accounts for share capital below 50,000 equity shares. No, I'll mention out of the above 5,000 shares have been issued for a consideration other than fantastic question. Easy. What do we have after this? After this, what we have is suspense account of 10,000 represents cash received from sale of some machinery on 1/4/2022. Cost of the machinery was 24,000. Accumulated depreciation is 20. This much worth of asset is gone now. So I'll not do detailed journal entry and everything. I'll try to tell it in short. Try and understand. If you don't understand, then I'll explain in detail. Because the plant and machinery is disposed of original cost 24, original cost column will reduce by 24. And because accumulated depreciation on this is was 20,000 will be reduced in accumulated depreciation column. So think accumulated depreciation 20, original cost 24. So 24 minus 20. Can I say 4,000 is the WDV? Sold for 10,000. 6,000 is profit. That 6,000 I would write in other income. Other income I can open notes to accounts or I can straight away write here 6,000. If you want, I'll open notes to accounts. Notes to accounts, I'll write other income. What is other income? Profit on sale of machinery. Sale value of the machinery was 10,000. Book value is found like this. Original cost 24. Accumulated depreciation 24. 10 minus 4, 6. Easy? Okay. Very nice. The 10,000 suspense is removed. I don't have to worry about that 10,000. It's been sorted. 6,000 I book profit. 4,000 is the 24 and 20 difference. Asset A reduced by 20 now. Am I right? Accumulated depreciation is reduced by 20. Asset A reduced by 24. Net difference is reduced by 4. Here I have taken 6. 6 plus 4, 10. Suspense 10 is getting nullified. You want me to write journal entry? Everyone understood this? What do we have after this? After this depreciation, sorry, after this adjustment was depreciation is to be provided at 10% on that asset sale has happened at the beginning of the year. The asset sale has happened at the beginning of the year. So 8 lakh 24 minus 24. Can I say 8 lakh is the value of the asset? There is no evaluation. How much is current year depreciation on this 8 lakh worth of asset at 10%? 80,000. How much? 80,000. 80,000 is the current year depreciation on this asset. Can I say 80,000 is the depreciation for the current year? 2 lakh 10,000 is the depreciation at the beginning. 2 lakh 10. 1 lakh 50 minus 20. It will be how much? 1 lakh 30. 1 lakh 30 plus 80. Correct? 2 lakh. So then do 8 lakh minus 2 lakh 10. 5 lakh 90 will be closing balance. Did you understand? Beginning there was 1 lakh 50,000 depreciation. We've already removed the asset worth 20 accumulated depreciation. It becomes 130. During there we've charged 80 depreciation. Accumulated depreciation becomes 2 lakh 10. Asset is there to the extent of 8 lakh. 8 lakh minus 2 lakh 10, right? 5 lakh 90 as the closing balance of the asset. This 5 lakh 90 will go to property, plant and equipment in balance sheet. That 80,000 will go to depreciation and amortization expenses. I'll write that. If not, I might forget. So depreciation and amortization expense, how much would I write? Okay. In my statement of profit or loss. What's after that? Then bank balance includes 5,000 from ABC, which is not a scheduled bank. How much is bank balance? Bank balance 28. 28 is how much is not scheduled bank? 5,000. So in my notes to accounts of cash in hand, I'll write cash at bank. ABC bank, it is not a scheduled bank, is how much? 5. Am I right? How much is balance? Other bank balance. How much is other bank balance? It was 28 minus 5. Can I say 23,000? Total will come to 30. Total will not change. But individually, difference has to be shown as to how much is it not a scheduled bank and how much is in a bank other than not a scheduled bank, which is basically a scheduled bank. Got it? Then what is the next adjustment? Adjustment make provision for tax at 30%. This has to be written in PL. In our statement of profit or loss, which is not yet full, after I post all the items, here I will create provision for tax at 30%. This provision for tax amount, whatever I write here, if it is paid, it has to be reduced in cash and cash equivalent notes to accounts. If it is not paid, it will appear in balance sheet as short term. You understood this? Yeah. Then next item. This I can do only at the end. Okay. Then trade payables 50,000 is due for more than 6 months. We have already prepared one trade receivables note. Have you already prepared 120? In this, I am going to tell how much it is outstanding for more than 6 months. How much is outstanding for more than six? How much? 50. 120 minus 50? 70 is outstanding for less than 6 months or other debt. Got it? By this, I have covered all eight adjustments. All eight done. What to do next? Close note to accounts, post to balance sheet, P&L. P&L, you identify net profit, short-term provisions, provision for tax, then net profit, reserves and surplus, balance sheet, total, tally, celebrate. Hey, then go to next question. Shall we? Step by step. First, to begin with, share capital, 495. Shall I write 495 to balance sheet? 4,95,000 will go to balance sheet as note number one, share capital. Then reserves and surplus. Think, do you have reserves and surplus? Yeah, we do have reserves and surplus. But we cannot close this. Why? I don't know current year from. That I'll get to know only after I finish my plan. Keep this on hold. That's note number two. Note number three, long-term borrowings, debentures. I will post it, long-term borrowings, debentures. Note number two, reserves and surplus. Note number three, long-term borrowings. Number four is short-term provisions. Actually, there is no need. You can write from PL straight here. But you can write if you want to. This also I can't find right now. Why? To find provision for tax, I should know profit. To find profit, I should close PL. To close PL, I need to close notes to accounts of PL, which I have not yet done. Understood? Let's go. What do we have after short-term provisions? We should see some assets, tangible assets. 9 lakh 60 land, 5 lakh 90 plant and machinery. Together, can I say 14, 15 lakh 50? Where will 15 lakh 50 appear? Balance sheet, asset side, tangible assets. Shall I? Tangible assets 15 lakh 50, tangible assets 15 lakh 50, tangible assets, property, plant and equipment 15 lakh 50, note number 5. Then inventory already written. Let's go to trade receivables and cash and cash equivalent. 6 and 7. Are you ready? Come to note number 6. Note number 6. Trade receivables. 1 lakh 20. Cash and cash equivalent 30. Shall I post both of them together? 120 and 30. In the balance sheet, trade receivables 1 lakh 20. Cash and cash equivalent 30. So shall I total balance sheet? No, two items missing. Reserves and surplus and short term. Sir, balancing figure. Balance sheet and balancing figure. Clear is sir. Don't do that. Come, let's go to PL. Revenue from operation, other income, both are written. 12 lakh 6. And expenses, cost of material consumed is not there in this. Adjusted purchases is already written. Employee benefit expenses is not there. Salaries, finance cost and depreciation is also done. Only notes to accounts that we have is other expenses. Shall we post? Nodi, how much is other expenses? Oh, other income is already posted. 6. Here, 80, 45, and 25. 1 lakh 50. I'll write 1 lakh 50 to my other expenses. Take the total. 4 lakh, 4 lakh 30, 5 lakh 10, 5 lakh 60, 6 lakh 60. 6 lakh 60 is total expense. 12 lakh 6 is total income. 12 lakh 6 minus 6 lakh 60. 5 lakh 46,000 is profit before tax. On this profit before tax, 30% will go to income tax. 1 lakh 62, 63,800. 163,800 income tax gone. Don't try to find net profit. But write 163,800. Why? If in case you go to profit, then you will go to resources of place and then forget short-term provisions forever. The moment you write 163,800, remember to take it to balance sheet as short-term provision. Short-term 163,800. I've written straight. If you want, you can write it in one note to accounts here. Take the total and then post also. Not required, but if you want, you can do it. There will be no marks cut for not doing short-term provisions. 163,800 done. Now determine the profit. 546 minus 163,800. A minus, okay, tax don't add it. Government will not give tax to you. Yeah, that stage has not yet come. Undu kosila. 3 lakh 82,200 is profit or loss for the period. This 3 lakh 82,200 will be 3 lakh 82,200. Add them. 380 to 200 plus 75. 457 200. Take the total 150, 457 200, 40 and 160. 8 lakh 7,200. 8 lakh 7,200 to go to balance sheet, which I already wrote by mistake. Got it? Now take the total on the liability side. 4 lakh 95,000 plus 8 lakh 7,200 plus 3 lakh plus 30,000 plus 1 lakh 63,800. 7 lakh 17 lakh 96,000 is the total on the liability side. Check the same total on the asset side. 1550 plus 96,000 plus 1 lakh 20 plus 30. Yay! Got it? Any doubt? Let's now solve question number 3A from our model test paper number 1. This question 3A is on the topic of accounting standard 9. Let's begin. Y Limited used certain resources of X Limited. In return, X Limited received rupees 10 lakh and 15 lakh as interest and royalty. What resources have been used? Resources have been used is money. They have given money to the other party and maybe given some intellectual property also. You received 10 lakh rupees interest, 15 lakh rupees royalty from Y Limited during the year 22-23. You are required to state whether and on what basis these revenues can be recognized. 4 marks lottery. Well, thank you first and then start the answer. So the answer will be as per accounting standard 9, revenue recognition, interest should be recognized on time basis. And royalty should be recognized based on accrual basis subject to contractual agreement. Accrual basis subject to contractual, you write this statement, one theory line, and then write, in the case of Y Limited, for the resources utilized from X Limited having been received interest and royalty, which is of rupees 10 lakh and 15 lakh, it has to be recognized on time basis and accrual basis based on contractual agreement respectively. Based on that, 10 lakh and 15 lakh, together 25 lakh is you. That's the conclusion. Remember to write the statement as per AS9, whatever it tells, and then write with respect to X Limited, with respect to Y Limited, with respect to ABC Limited. Write the statement what is applicable and then conclude your answer. I hope everyone understood. Yes, sir. Let's now solve question number 3B from our model test paper number 1. This question 3B is on the topic of internal reconstruction. They've given the balance sheet of the company ABC Limited. What is it that they want us to do? After balance sheet, they've given notes to accounts. Then they've told following scheme of reconstruction was finalized. They've given 1, 2, 3, 4, 5 adjustments. They are asking us to pass journal entries in the balance sheet of the company, also prepare capital reduction ledger, then prepare balance sheet extract. They don't want full balance sheet. It is required only for equity and liabilities. Asset side not required. Only equity, share capital, and then the share capital adjustment, reserves and surplus, long-term borrowings, other current liabilities, and current liabilities for the sum. Easy. Let's start. Start with the first adjustment. What's happening in adjustment number 1? Preference shareholders would give up 30% of their shares in exchange of allotment of 11% debentures to them. Little tricky. If you read slowly, you understand how much money you owe to preference shareholders. In that 30% go in capital reduction account. Balance amount, whatever is there, that will be settled by giving them 11% debentures. So preference share capital account debit to preference shareholder, that can be your first entry. Then you can write preference shareholder account debit. 30% of the money you transfer to capital reduction, 70% money you write into debentures. Alternatively, you can straight away write preference share capital account debit to capital reduction to debentures. That's 11% debentures. That's also okay. How much is the money that you owe to preference shareholders? It is rupees 6 lakh. 30% of 6 lakh. 1 lakh 80 gone. That will go to capital reduction. Balance 4 lakh 20 will be 11% debentures. This is our first adjustment. Entry is 8% preference share capital account debit 6 lakh. In that 30% of the money will be transferred to capital reduction 1 lakh 80. Out of 6 lakh, once you deduct 1 lakh 80, what is remaining? Or 6 lakh into 70%, 4 lakh 20 settled by issue of 11% debentures. Being 30% reduction in liability and of preference share capital and issue of 11% debentures. I have written the same question, whatever given in the form of ratio. Got it? By this, we're done with our first adjustment. Focus on the second adjustment. What's there in the second adjustment? Debenture holders having charge on plant and machinery would accept plant and machinery in full settlement of their dues. Oh, nice. You don't have to pay any money to your debenture holders. Give them plant and machinery. Asset gone, liability settled. Asset is going out, credited. Liability is being settled, debited. So we'll write debenture holders account debit to plant and machinery. To do that, we need to close our debentures. 9% debentures 12 lakh. So I can write two entries: 9% debenture holder to plant and machinery. Or straight away 9% debentures to plant and machinery. That's also okay. How much are we supposed to pay to debenture holders? 12 lakh will be gone. And I would have to give them plant and machinery. I will credit plant and machinery. Yeah, but wait. Plant and machinery need not be 12 lakh. We need to write the book value. What is the book value of plant and machinery? 9 lakh. Oh, if we had to give cash to our debenture holders, we are supposed to give them 12 lakh. But we gave them plant and machinery of 9 lakh and ಅಷ್ಟೇ ಮುಗೀತು. So instead of 12, we gave 9, no? 3 lakh rupees profit. That profit will go to capital reduction account. Being debenture holder settled by allotment of plant and machinery. Alternatively, you can split this into two entries. What is it? Debentures to debenture holder to plant to capital reduction. Yeah. Instead of writing debenture holder to plant to capital reduction, first you can write plant account debit to capital reduction 3 lakh, 3 lakh. Increase the plant and machinery value to 12. And then write debenture holder to plant and machinery 12 lakh. That's also possible. But either way, sir, it will arrive, you will arrive at what value? 3 lakh rupees only as capital reduction balance. Everybody understood? Very nice. Come on, let's go to point number 3. What's happening in adjustment number 3? Inventory equal to rupees 5 lakh in book value will be taken over by trade payables in full settlement of their dues. Exactly same like debenture holders and plant and machinery. In the place of debenture holders, the debt decreasing is trade payables. In the place of plant and machinery, asset decreasing is inventory. But inventory equal to 5 lakh is taken over. Inventory is of higher value. How much inventory do we have? Come to balance sheet, balance sheet, balance. 14 lakh worth of inventory. Sir. Full inventory could put only 5. Only 5. So can I say my inventory credit here will be only 5. Trade payable, you have got full settlement or only full settlement? How much is trade payables? Balance sheet, liability side, trade payables 5 lakh 92,000. Oh, full settlement. Meaning 5 lakh 92,000 worth of trade payables were supposed to be paid by 5 lakh 92,000 worth of cash. I gave 5 lakh worth of inventory and settled 5 lakh 92,000 worth of liability. So 92,000 without giving a rupee cash I have settled. That 92,000 will become capital reduction account. It's like profit. Everyone understood? So trade payables account with 5 lakh 92. To inventory 5 lakh. To capital reduction 92. Close. Is it? Say something. Fantastic, my friends. Let's go to the next one. Fourth one. What's happening in fourth one? Investment to be reduced to market price. Let's check what is the cost and what is the market price. Investment. Yeah, it is 68. Market price is 55. From 68, I should reduce it to 55. Basically, I should reduce by 8 plus 5, 13,000. 13,000 decrease. Investment should be credited. Debit will be capital reduction. This is utilization of capital reduction. This is I will debit capital reduction by 68 minus 5, 13,000. And it will be credited to which account? Investment. Investment is an asset and the asset value will decrease. So I will credit it. Did everyone understand this? How did I get this 13? It is 68 minus 55,000. Everyone's clear till here? Let's go to fifth adjustment. The last adjustment. The company would issue 11% debentures of rupees 3 lakh and augment its working capital requirement after settlement of bank order. You issued these 11% debentures. This money will be first utilized to pay back our bank OD. After paying that, whatever money is there, that they'll keep it for working capital. So don't get confused. August to May to end of quarter. Don't worry. Just pay off that bank OD and balance you keep it with yourself. How much? 3 lakh worth of debentures are issued. Number 5, entry is bank account debit to 11% debentures. 3 lakh, 3 lakh. Shall I pay off BOD? How much is body? Bank overdraft 1 lakh 50. From 3 lakh, I will pay that bank overdraft. Bank overdraft of 1 lakh 50 liability is decreasing. Debit, credit bank account 1 lakh 50. Remaining money will be there with us. Now one closing entry has to be written. We need to identify the balance in capital reduction. Use it to write off accumulated losses, intangible assets like goodwill and P&L account debit balance. If it is there in surplus, write it to capital reserve. Shall we see how much is capital reduction? Check it out. First entry, we have credit of 1 lakh 80. Take 1 lakh 80 minus. Did you take 1 lakh 80 minus? Then again minus 3 lakh. Credit is minus, debit is plus. Okay. Then third entry again minus 92. Fourth entry plus 13. That's it. What do we have? Minus 5 lakh. Very good. Minus 5 lakh 59,000. In order to close it, you would agree with me, I would have to debit it. If I debit it, it will become plus, no? 5 lakh 2 plus 5 lakh 15, it will become C. Do we have any accumulated losses to write off? Check it out. Liability side, there is no problem. Come to asset side. PPE, intangible asset 70, we'll have to see. If it is goodwill, we can write off. What is their intangible asset? Patents and copyrights. That will be valid asset. If it was goodwill, we would have written it off. In residual surplus, is there any accumulated loss? Yeah. Debit balance of P&L 4 lakh 5. Shall we write this off? 4 lakh 5,000 debit balance. In order to write it off, I should credit it by 4 lakh 5. 5 lakh 59 is the balance available. 4 lakh 5,000 worth of accumulated losses is written off. Please take 5 lakh 59 in your calculator and deduct 4 lakh 5. Remaining 1 lakh 54 will be transferred to capital. They have not stopped here. They have actually asked us to prepare ledger capital reduction. Let's do it. No big deal. In the first entry, we have how much money? 1 lakh 80. So it can be written to preference share capital account or 11% debenture account. It will be preference share capital to 11% debentures, preference share capital to capital reduction 1 lakh 80. So in my capital reduction account, I'll write by preference share capital 1 lakh. Done. Come to the next slide. Second entry. Do you have capital reduction here? Yeah. 9% debenture to capital reduction. Am I right? So in capital reduction account, shall I write by 9% debenture 12 lakhs? Fantastic. I would write here by 9% debenture holder account. Sorry, 3 lakh. Sorry. Not 1 lakh. In 12 lakh, 9 lakh we give machinery. 3 lakh is capital reduction. This entry if split, it will be debenture account debit to plant and machinery 9 lakh, 9 lakh. Debenture account debit to capital reduction 3 lakh, 3 lakh. Got it? Third one, trade payable to inventory, trade payable to capital reduction. How much is trade payable to capital reduction? And in capital reduction account, I should write by trade payables 92,000. Come on here in capital reduction account, I'll write by trade payables account 92,000. Everyone understood this? What do we have after this? By trade payables 92. Come to capital reduction to investment. Entries capital reduction account debit to investment. In investment account, we would write by capital reduction. In capital reduction account, I'll write to investment. How much? So in my capital reduction ledger, I would write on the debit side to investment 13. I told you this is money utilized. Next, fifth entry, there is nothing called capital reduction. Sixth entry, there is nothing called capital reduction. Ultimately, it is utilized to write off P&L and capital reserve. In capital reduction ledger, I'll write same thing. To profit and loss account, 4 lakh 5,000. To capital reserve, 1 lakh 54,000. That was in fact the balancing figure. And by this, our capital reduction ledger will get closed. They've asked us to do balance sheet. Because this is not a 14 marker and a 10 marker, they have asked us to do only balance sheet on the liability side, equity and liabilities, meaning share capital, reserves and surplus, long-term borrowings, other non-current liabilities and current liabilities. Shall we begin? To begin with, equity share capital. We have 2 lakh equity shares. Have we touched this equity shares anywhere in the entries? Anywhere equity share capital? No. This will appear as it is in my share capitals notes to accounts. Note number 1, share capital. I would write equity share capital 2 lakh. No. 2 lakh equity shares of rupees 10 each 20. Here we have 6,008% preference shares of rupees 100 each, 6 lakh. And this 6 lakh we have debited here. Am I right? So that's it, gone. That's gone. We don't have preference share anywhere else. Come to the next item. Reserves and surplus. Here it was there 4 lakh 5. That was a debit item, no? Here we have credited it. See here 4 lakh 5. Gone. Isn't it? Yes. Then reserves and surplus is actually over, but some new reserves and surplus will come. Capital reserve. We will write it later. Yeah, we'll go in the notes to accounts order. Then we have long-term borrowings, 9% debentures. It was their liability 12 lakh, but not anymore. Why? Here we debited it 11% debentures, no, 9% debentures 12 lakh, gone. New debentures were issued, but that we'll see later. We're going in the order of note to accounts. Did you understand this 9% debentures gone? Next item. PP. Asset side, we don't care. Anything else on the liability side? Liability side, share capital done, resource and surplus done, long-term borrowings done, trade payables 5 lakh 92. This liability is there. But did we write off? Yeah, full 5 lakh 92 written off. Yeah, gone. Next, what is the liability? Short-term borrowings, bank overdraft 1 lakh 50. This is also paid off. Yeah. See here, I'll show. Bank overdraft 1 lakh 50 paid off. Gone. Now, shall we see, is there anything in the journal entries left out regarding liabilities? 11% debentures are freshly issued 4 lakh 20. You agree with me? 4 lakh 20,000 worth of debentures are issued. This has to appear in our balance sheet. Long term borrowings. Not just that. That 11% debentures will repeat again. 3 lakh. How much here? 4 lakh 20. How much here? 3 lakh. How much is it together? 7 lakh 20. I will write long term borrowings as note number 3. Note number 2, there is capital reserve and resource on surplus. Don't forget. I'll write 11% debentures, 4 lakh 20, 3 lakh together, 7 lakh 20. Done. Any other item, 7 lakh 20 will go to my balance sheet here, and 20 lakh is my share capital. Let's see if there is any other item in my journal entries. First entry gone, second entry asset, inventory asset, investment asset, bank asset, capital reserve is one item that I should post it to liability side. Other item, bank and all of that, what is there is assets. We are preparing balance sheet only for liability side. Why only liability side? Because they've asked only liability side. Let them give 14 marks. We'll do asset side also. They've given only 10 marks. इतना पैसा में इतना each मिलेगा. पूरा आंसर चाहिए तो पूरा पैसा देना पड़ेगा. पूरा मार्क्स देना पड़ेगा. So they are not giving. So don't worry. Write capital reserve in our reserves and surplus, which is note number 2. Note number 2. Capital reserve 1 lakh before. Write it here. I am sad for you people that you won't get that happiness of totaling the balance sheet and making it tally and like, yes, you won't get it. Why? They've asked only that. Understood? This is the answer for this question on internal reconstruction. Let's now start question number 4 from our model test paper number 1 for CA Intermediate Advanced Accounting. This question number 4 is on the topic of amalgamation, accounting standard 14. Let's see what is it that they've asked in the question. They've told financial position of two companies, Hari Limited and Vayu Limited, as on 31st March 2023, is as under. Okay, let's not waste time on balance sheet. Let's see what have they given after balance sheet. After balance sheet, they've given notes to accounts. This is also of no great deal of importance. Chill and come to the end. They told Hari Limited absorbs Vayu. So Hari is transferee. Vayu is transferer. Hari will do and absorbs Y. Okay. On the following terms, they've given A, B, C, D 4 points. And what is it that they've been asking us to do? Prepare necessary acquisition entries in the books of Hari. So these entries are in the books of transferee. Remember the story? Opening the box, taking the assets and liabilities, keeping in the almirah, kicking the box, paying the money, then TRUMS. If you don't know what I'm talking about, please do revise the basics of amalgamation once today or in the middle. Stop this problem, do that revision, then come back and watch the rest of it. We've been also asked to draft balance sheet after absorption. Okay. We need to write accounting entries and then also draft the balance sheet after absorbing Y. What you have to remember is they've not asked you to do any working note, but we have a couple of mandatory working notes. What working note should we do? We need to do one working note, computing purchase consideration. If in case the purchase consideration method turns out to be based on NAT, then we have to end up doing NATO computations. So NATO PC difference would become our will or capitalism. That again is another point that we should be doing. Guys, understood? Quickly read this. 10% preference shareholders are to be paid at 10% premium by issue of 9% preference shares of Hari Limited. So in this company, Vayu Limited, how much is preference shares? It is 1 lakh rupees. 10% preference shares. They are settled by issue of very good 9% preference shares in Hari, but they are to be paid 10% premium. Let's write that. Before that, name of the transferor company, Vayu Limited. Name of transferee company, Hari Limited. Nature of amalgamation. Right now, we don't know. Hey, we don't know. We'll get to know eventually later. We have five conditions. Remember? Then, based on that, we'll decide the method of accounting. Method of PC. Right now, it looks like payment method, but suddenly things can change. They can ask us to do NATO also, no? So right now I'll only write what I know. 10% preferential shareholders of Vayu Limited. How many shares are there? It is 1 lakh rupees and shares are of rupees 100 each. Please do 1 lakh by 100. Can I say 1000? It is 1000 shares of rupees 100 each, which comes to rupees 1 lakh. Am I right? We need to pay them 10% premium. 10% premium, can I say it comes to 10,000? It is 1 lakh 10,000. 1 lakh 10,000 is settled by issue of preference shares of Hari Limited. Of Hari Limited, what is the issue price per share? Nothing is mentioned. I'll assume the same nominal value of 100 only. If you divide 1 lakh 10,000 by 100, how many preference shares are to be issued? 1100. Can I say 9% preference shares in Hari Limited to be issued is 1100 preference shares of rupees 100 each, which comes to rupees 1 lakh 10,000. This is PC to preference shareholders. To equity shareholders, if they give payment information like this, it will be payment method for PC. What does that tell? On the net assets, you need to pay this much goodwill. Then it will become net assets plus goodwill PC. From that PC, I will deduct this and identify what is to be paid to equity shareholders. Then it will be not payment method, but actually an auto method. So right now, I will not decide the method of purchase consideration. It's actually not required. They are not going to give you any marks for identifying the method of PC. But anyway, sir, we will still be open for it. What's next? Second point. Goodwill of Vayu Limited is to be valued at 50,000. So we will identify the net assets value of Vayu. Take each asset at the agreed value, whatever they would be given. On that, we will pay 50,000 rupees more. On the net assets of Vayu, we will pay 50,000 more. That will become their PC. Buildings are valued at 1 lakh 50, machinery is valued at 1 lakh 60. The moment they give a value other than the book value for any asset of transferor, this becomes amalgamation in the nature of purchase. If you call it merger, you remember the conditions, all the assets and liabilities should be taken over at book value, and the purchase consideration to shareholders has to be settled in equity shares. Am I right? And minimum 90% of the shareholders should continue, and their reserve and surplus also should be taken over. There are several conditions. Even if one node of those five is not satisfied, it will end up becoming amalgamation nature of purchase. Here, asset condition is breached. Why? See, land and building of Vayu is how much? 1 lakh. Plant and machinery is 1 lakh 50. What is the value which it is taken over? It's taken over 1 lakh 50 and 1 lakh 60. Land of 1 lakh is taken over at 1 lakh 50. Plant and machinery of 1 lakh 50 is taken over at 1 lakh 60. Oh, change aitala. So this will be amalgamation nature of very nice. And method of PC is payment method, payment come NATO. It's like payment come NATO, partly payment and NATO. Have they told what is to be given to equity shareholders? They've told equity shareholders of Vayu Limited. They've given only issue price. So this is payment and NATO, partly payment method. Partly the data is given like it is NATO, net assets taken over method. I hope you understood. Then method of accounting, because it is purchase in the books of transferee will follow purchase method. In the books of transferor, irrespective of nature of amalgamation, it will anyways be dissolution, realization, or liquidation of. This is only disclosure requirement as per accounting standard 14. For writing this, you will be not given any marks, and for not writing, you will not lose any marks. But writing it will give you a better, to say, hold on the topic. The evaluator also will feel like you know the topic much nicer than the rest of. It's an impression. What impression? Nice. Then let's do a NATO computation. In this NATO computation, I will take all the assets, but agreed value. And once I find NATO, I'll add goodwill also. Shall I? In fact, if you want, you can start with goodwill of 50,000. Shall I take goodwill of 50,000 to start with? Okay. Then building 1 lakh 50, machinery 1 lakh 60. Let me write. Land and building 1 lakh 50, plant and machinery 1 lakh 60. Then what about the rest of the assets? 1 lakh 50 plant and machinery, 1 lakh 60 plant and machinery, building 1 lakh 50 done. Inventory is to be taken over at 10% less value. How much is inventory? Inventory is 1,75,000. Second column is Vayu. First column is Hari. So 1,75,000 worth of inventories are taken over at what value? 10% less. Can I tell inventory is 1,75,000 minus 10%, which is 17,500. If deducted, what do we get? 1,57,000. Fantastic. What do we have after that? Provision for doubtful debts is to be created at 7.5%. How much is my trade receivables that we have? 1 lakh. This is taken over, but we are going to create provision at 7.5%. So that means, can I say trade receivables will be 1 lakh minus 7.5%? But please don't write like that. Provision for doubtful debts is not decrease in asset, it's a liability. Provision for doubtful debts is not a decrease in asset, it's a liability. So write it separate. Write it separate. So I write trade receivables 1 lakh add provision for doubtful debts as a separate item. 7,500. Or you can write it this way. So if you would want, I would prefer writing provision for doubtful debts 7,500 separately. You understood? If in case I prepare balance sheet, in that also I should not straight away write trade receivables 1 lakh. I would have to write trade receivables at 1 lakh and then show 7,500 provision and then show the trade receivables as 92,500 rupees. Everyone understood? Next, what do we have after that? Then any other asset that we have? We are done with property, plant and equipment. 2,50,000 is there, no? In this, what assets did we have? In this, we had land and building, plant and machinery. Both are taken over. Then we had cash and cash equivalent. Nothing mentioned. And it is method of amalgamation is purchase. We can assume it's not taken over. For goodwill, we've taken one revalued figure. Am I right? That is done. Inventory done. Trade receivable done. Cash and cash equivalent assumed to be not taken over. You can assume it to be taken over also. Or you can assume it to be not taken over also. Either ways is fine. Have they mentioned anything? Taken over, not taken over? Nothing. Shall I assume taken over only? Would it be wrong if you assume it otherwise? No, not at all. Either way is okay. So fine. Let's assume it is taken over. How much is cash and cash equivalent here? 20. So I'll write here cash and cash equivalent 20. And now don't tell agreed value for cash and cash equivalent is 19. 20,000 rupees worth of cash is taken over at 19,000. ಯಾರಾದ್ರೂ ಆ ಥರ ಕ್ಯಾಶ್ ಮಾರೋರಿದ್ರೆ ಹೇಳಿ ತಗೊಳ್ಳೋಣ ಯಾ ಒಂದು 5 ರೂಪಾಯಿ ಹೆಚ್ಚು ಕಡಿಮೆ ಆದ್ರೂ ಪರವಾಗಿಲ್ಲ. So assets done. If you see liability side, we have trade payables. Nothing mentioned. I'll assume all liabilities are also taken off. Liabilities don't start from the top. Why? On the top we'll have the share capital and reserves and surplus, which will never be taken over. Start from bottom. Yeah, I'll assume trade payables 80,000 taken over at value. Long term provisions 20. ಏನಿದೆ long term provisions ಅಲ್ಲಿ? Retirement gratuity fund. Assume that that is also taken over. Then what do we have after that? I think that's it. Reserve and surplus though will not touch. So 80-20. Shall I deduct two liabilities? Retirement gratuity fund 20, trade payables 80. Clear? Alternatively, if you want, I would write here provision for doubtful debts. 7.5% of 1 lakh, which is minus 7,500. Understood this? And here in that case, I'll keep full 1 lakh. Does this make sense now? Yes, sir. You can treat it like this. Other way also is okay, but I would recommend you to do it this way. Sometimes in study matter also they've given that way. It's okay. What do we have after this? All assets over, all liabilities over. Taken over here. Now, fatapat find what is the value of total assets. I'll write assets total value here. How much will it be? 6,37,500. Liabilities taken over. 1,07,500. From 6,37,500 deduct 1,07,500. Can I say we'll arrive at 5,30,000? 5,30,000 is net assets taken over. 5,30,000 is net assets. Very nice. When you take over 5,30,000 worth of assets, you need to give PC worth of 5,30,000. This is NATO/PC. Why? Goodwill is already included, yeah. Goodwill is already. I have to give PC of 5,30,000 only. In 5,30,000 PC, what I should give? 1,10,000 I have already given. How much have I already given? 1,10,000 to whom? Preference shareholders. How much should I give to equity shareholders? 5,30,000 minus 1,10,000, which is 4,20,000. This 4,20,000, whatever I have to give now, There's some information. They need to be equity shareholders of Vayu Limited will be issued necessary equity shares at 5% premium. What percent premium? 5% premium ಅಲ್ಲಿ ಕೊಡಬೇಕಾಗುತ್ತೆ. Nominal value of equity shares in Hari will be how much? See that nominal value. Hari transferee company 10 rupees. What is the premium on issue that's mentioned here? 5%, not 5 rupees. 10 rupees nominal value. Premium on issue 5%. What is 5% of 10? 0.5. Can I say issue price is 10.5? PC to be given is 4 lakh 20. Price per share is 10.5. If you divide 4 lakh 20,000 by 10.5, you will understand number of shares to be given. How many shares are to be given? 40,000. Can I say 40,000 equity shares of rupees 10 each, given at premium of rupees 50 paise per share? This is PC. Please respond. Can I say 40,000 equity shares of rupees 10 each, issued at a premium of rupees 50 paise per share? This is PC. So equity shareholders, we have NATO come PC distribution table ready, everything done. All that we need to do now is journal entries. Journal entries, remember, the transferor will come and give the box. He will ring when you will open the door, you will receive the box name is business purchase. First you receive the box from the liquidator of transfer. Then you will be standing there. You will open the box. Assets and liabilities will pop out. Then you will give him money. Am I right? After you give him money, you will kick the box and then you will close the door and then you do TRUMS. Debentures, realization expenses, unrealized profit, mutual indebtedness, statutory. Unfortunately, debentures is not there in adjustment here. Realization expense is not there. Unrealized profit is not there. Mutual indebtedness is not there. Statutory reserve is also not there. So drum say illa. So you receive the box, you record the assets and liabilities, pay them PC and over to balance sheet. Shall we begin? Come on. First entry. You are receiving the box. What is the entry for receipt of the box? That box name is business purchase. Debit business purchase. Credit will be liability that you have. What is the name of the liability? Liquidators of Vayu Limited. And the amount here will be PC. Pineapple Allah. 5 lakh 30. Pineapple cake. 5 lakh 30, 5 lakh. Actually, ಚೆನ್ನಾಗಿರುತ್ತೆ pineapple cake. Nice. There you go. Apple cake. Nice. 5 lakh 30, 5 lakh 30. Then, so we wrote the entry business purchase to liquidate the Bio Limited. Then, we will open the box. When you open the box, what do you get? Assets. That NATO you did know here. Whatever assets are there here, debit them. Whatever liabilities are here, credit them over. Can I debit assets? Here, goodwill, land and building, plant and machinery, inventory, trade receivables, capital. They order lady. Goodwill, land and building, plant and machinery, inventory, trade receivables, cash. Credit will be provision, retirement gratuity fund, trade payables. Provision, retirement gratuity fund, trade payables. This is 7,500. Retirement gratuity fund is 20. Trade payables is 80. Debit amounts will be 50, 150, 160, 157, 500, 1 lakh 20. 50, 150, 160, 157, 500, 1 lakh and 20. Base element in money. This business purchase box, whatever was there, you open from that box and you get these many things. What will you do after unboxing with the box? Throw credit the box business purchase account by same amount, 530. This has to be closed. Yes. The difference in this should have been this goodwill. We already recorded it. There will be no difference. Once check mabadi. Writing all of those only we found NATO. NATO itself became PC. PC itself was written in first entry. So obviously it will match. But this is our checkpoint anyways. You have trust issues with me? You check your total. Okay, Baba, okay. Earning investment account, I told someone you can write debit side in one page, credit side in one page. They're like, sir, is it okay? Like I told, I am only telling you, okay, you can write, marks will be given. Like, sir, how do you? I told in the past, I've asked students to write, they've written, the mark paper has been corrected, marks have been given. Then one is like, sir, Nimuning number. Hey, come on, yeah. Okay, I told, don't trust me. Now waiting. Now waiting. Don't trust me. Yeah, when you trust the driver, journey is smooth and simple. If you don't trust the driver, don't do it. ಅಡಿಗೆ ಬಟ್ಟೆ ನಂಬಿಲ್ಲ ಅಂದ್ರೆ ನೆಮ್ಮದಿಯಾಗಿ ಊಟ ಮಾಡಕ್ಕೂ ಆಗಲ್ಲ ಕಣ್ರಿ. ಯಾವ ಚಿರ್ಲೆ ಹಾಕೋರು ಏನೋ. ಓಕೆ, ಪ್ರೋಟೀನ್ಸ್ ಅನ್ಕೊಬೇಕು, ತಿಂತಾ ಇರ್ಬೇಕು ಅಷ್ಟೇ. Yes. So done with this. Yeah. Box is opened. Assets and liabilities recorded. Liquidator is waiting at the door from then. Yeah. Pay money, no. Yeah, pay money. Liquidator is a liability. We have credited it here. Now we'll debit liquidator. How much? 5 lakh 30. What are we giving them? We've done one table, discharge of PC. We are going to give them 1100 preference shares of rupees 100 each. 100 rupees 100 each. Par. Is there any security premium? No. 102. 9% preference share capital. 1 lakh. Should I do preference share capital or preference shares in Hari Limited? Yeah, we are only Hari Limited. In our books, why will we write our name? ನಮ್ಮ ಬುಕ್ಕಲ್ಲಿ ಬೇರೆ ಹೆಸರು ತಾನೇ ಬರಿಬೇಕು. ಬರೆದೆ ನಾನು ನಿನ್ನ ಹೆಸರ ನನ್ನ ಬಾಳ ಪುಟದಲ್ಲಿ. You write your name in your book, put heart and write I love you. And then show you like, hey, see, someone has written my name. Someone. Who wrote my name? Self-love is okay. But that is too much. Huh? Yeah, I love myself. Write a letter to yourself. Yeah, I love myself. I love myself. 1,10,000. Okay. Then we also, this is 1,100 shares of rupees 100. Hey, we will write 9% preference shares in Hari Limited. When we do entries in the books of Vayu, which is transferor, in books of transferee will not. Understood? The same shares when liquidator receives, he will write the entry 9% preference shares in Hari Limited to Hari Limited account. Understood? It's okay if you are in Hari. Don't write in Hari Limited in Hari books. Hari Barinali ಏನೇನೋ ಬರ್ದ್ಬಿಟ್ಟು then equity shareholders ಗೆ we issued some. See Hari Barinali ಬರ್ದ್ಬಿಡೋದು. Oh my God, Hari Barinali, Hari Barinali. Oh my God. Here the security premium is there. Careful. Observe. 40,000 shares of rupees 10 each at a premium of 0.5. You know why I write this detail when we do PC computation? So that when we're writing entries, we will not forget to write security premium. Now I should write 2 equity share capital. 40,000 into 10. 4 lakh. 2 security premium. 40,000 into 0.5. Very nice. Yeah. I'll write here 2 equity share capital account. 40,000 shares into 10. 4 lakh. 2 security premium account. 40,000 into 0.5. Box received. Unboxed and assets and liabilities returned and box kicked. PC is also paid. After that, close the door and TRUMS. There is no adjustments. That's it. Accounting entries are done. 14 marks, yeah, so easy. We've done 20 marks, big questions. In fact, 20 marks question, we did it for 40 marks, 60 marks. They asked entries in the books of transferor. We did entries in the books of transferor, entries in the books of transferee, sometimes ledger, and then balance sheet with notes to account. But being prepared for a test match will make you feel like this T20 analysis. Okay. Then come on, let's prepare balance sheet after absorption. Shall we? After absorption, balance sheet is prepared like this. We will take this balance sheet of Hari Limited, what is given in the question, add the impact of journal entries given, and then we'll arrive at the answer. I'll change the color. New politicians. Adalappa, highlighter. I'll change the color. Yellow is already there. I'll take green color. Okay. So ಅದು ಗ್ರೀನ್ ಕಲರ್ ಆಗೇ ಅಲ್ಲ, ಚೇಂಜ್ ಆಗ್ತಾ ಇರುತ್ತೆ. ಸೊ ಒಂದ್ಸತಿ ಆ ಕಡೆ, ಒಂದ್ಸತಿ ಈ ಕಡೆ, ಒಂದ್ಸತಿ ಇವ್ರನ್ನ ಬೈದು, ಒಂದ್ಸತಿ ಅವ್ರನ್ನ ಬೈದು. ನೋ ಕನೆಕ್ಷನ್ ಟು ಎನಿ ಒನ್ in reality. I'm talking about color green. Okay. So no reference to any local politics here. Share capital is 11 lakh rupees. Very limited. Okay. That lady over there, keep the grass down. Focus here. Green color. Focus. 11 lakh rupees Hari Limited. Come to notes to accounts. 11 lakh is two ways. One do equity share capital. One do preference share. First we'll take equity. 10 lakh is the equity share capital. Take your calculator, type minus 10 lakh. In the journal entries, if anywhere we have credited share capital, we'll take it as minus. If it is debit, we'll take it as plus. Total, we'll write it in the. Understood? What do you have in the calculator? Okay. See the accounting entry. Here are them 4 entry. First entry, do you have equity share capital anywhere? No. Second entry, check. Third one, yeah, there. How much? 4 lakh. minus 4 lakh ಮತ್ತೆ ಮಾಡಿದ್ರಾ ಎಷ್ಟಾಯ್ತು minus 10 minus 4 14 lakh correct. Here it was how many shares? Some 1 lakh shares. Here it is 40,000. 1 lakh 40,000 shares ಆಯ್ತು. Note number 1 ಈ ಸಲ ಕಪ್ ನಮ್ಮ ಬರೀತಿಲ್ಲಿ equity share capital 1 lakh 40,000 shares of which 10 is 14 lakh. This is a very very important point that you should remember. Out of this 1 lakh 40,000 shares, no 40,000 shares are given in the process of amalgamation. Do you receive cash? No, non-cash consideration. Non-cash consideration ಬಂದಿರೋದು you need to disclose. Out of the above 1 lakh 40,000, 40,000 sarees have been issued for non-cash consideration in amalgamation. Disclosure we need to make mandatory. If you don't do it, lose 1 mark. Hmm? Okay. Not at all, not a big deal. Packet. Yeah, one packet would vote after it. You give me your vote right. You sleep, I will vote. Yeah, 1 lakh is preference share capital that's there. Take this 1 lakh preference share capital minus 1 lakh in calculator. Did we further give some preference shares in the entries? Yeah. How much? 1 lakh 10. Previously it was 1 lakh, now 1 lakh 10. Together 2 lakh 10. Now 1,100 shares were issued. Previously it was 1 lakh divided by 100, 1,000 shares. 1,000 plus 1,100. Can I say 2,100? Observe preference share capital. How many shares are issued? 2,100 shares of which 100 each, 2 lakh 10. Out of this 2,100 shares, some shares we are only we wrote no in entries. How much? Yeah? 1,100 shares are issued for non-cash consideration. That I would write here. Out of the above 1,100 shares have been issued on amalgamation for non-cash consideration. Everybody understood? Fantastic. Yeah. What is it that we have after this 14 lakh and 2 lakh 10? Come back to this unlimited balance sheet only. We're done with share capital. Next, what is there? Reserve and surplus 70. We've been given it as note number. Come to note number 2 to see what is there in note number 2. 70. General reserve. This will come as it is. In the amalgamation journal entries, is there any reserve item? First entry, nothing. Second entry, nothing. Third entry, we have security premium. 20. Variyana? Okay. I'll write same general reserve. How much was that general reserve? 70. Note number 2, I would write security premium 20, general reserve 70, and that's it. All reserves and surplus are done. Anyways, we'll not total the note stocks. We'll keep it open. Huh? We'll do it later. Is that okay? What do we have after reserves and surplus? Then we have retirement gratuity fund. Namdu 50. Yeah? ಅವ್ರದ್ದು 20 ತಗೊಂಡಿದೀವಿ. I'll show here in entries. See here. Together, how much? 50 plus 20, 70. I will write it in our long-term provident. It's an employee benefit that should be given on retirement of the employee. What is it? Post-employment benefit, termination benefit. Post-employment. Termination means you get up, leave. That is termination. You kick them out. Or they only get up and then leave. Termination. Post-employment is they will retire. Thank you for your service. Best employee of the year. Happy retirement. Your wife, kids, or husband, kids, everyone will come. Everyone will stand one group picture we will click. And then shawl, or the fruit basket, bouquet, one Ganesha, all of that you will take and then, money. Son papdi box. Orange flavor soap papdi box. And all that you give and then you send. Retirement gratuity fund. Together 70. Okay, now. Oh, you lose 70. 7th alarm reason. Oh my god. Yeah. Hey, no. Are you done? No. I may be done. I might not be done. I don't know. I'll take 3 months' time and then decide. Hmm. Come on. Let's see the next item. What do we have after long-term provisions? Trade payables 1 lakh 30. Trade payables 1 lakh. Our 1 lakh 30 is our 1 lakh 30. In the entries, if you observe, we have taken over their trade payables also. How much? 80. So 1 lakh 30 plus 80, 2 lakh 10. I don't think there is any need for notes to account. Shall I straight away write here 2 lakh 10? Hey friends, 1 lakh 30,000 plus. Hey, if you want, you can open one notes to accounts and then write. I'm just saving time, space, and energy. Then after that, property, plant and equipment 8 lakh. Our PPE 8 lakh. But you cannot write PPE straight up. We need to go to note number 4, individual, asset by asset. ನಮ್ದು ಲ್ಯಾಂಡ್ ಅಂಡ್ ಬಿಲ್ಡಿಂಗ್ 3 lakh. ಸರ್ ಅವ್ರದ್ದು 1 lakh ಬಂದ್ಬಿಡಿ ದಟ್ ವ್ಯಾಲ್ಯೂಷನ್ ಚೇಂಜ್ ಆಗಿದೆ. 3 lakh ಓಕೆ, 1 lakh ನಾಟ್ ಓಕೆ. ವಾಟ್ ಈಸ್ ದ ವ್ಯಾಲ್ಯೂ ಆಫ್ ದೇರ್ ಪಿಪಿ? ಲ್ಯಾಂಡ್ ಅಂಡ್ ಬಿಲ್ಡಿಂಗ್ 1,50,000. ಎಷ್ಟಾಯ್ತು ಅಲ್ಲಿಗೆ? I will open one notes to accounts for our PPE also. There I would write ನಮ್ದು 4,50,000 ಅಲ್ಲ, ನಮ್ದು 3 lakh, ಅವ್ರದ್ದು 1 lakh ಸೇರಿಸ್ಬಿಟ್ಟು 4,50,000. After land and building, plant and machinery. How much is our plant and machinery? Hurry. 5 lakh. How much is that of Y? Can I take 1,50,000? No. There is a change in the value. How much is the change to value? 1 lakh. 1,60,000. Right? Yeah. 5 lakh and 1,60,000 together 6 lakh. Any other asset PP? No. Done here. Come back to balance sheet again. We're done with PP. Intangible asset 50. That is our PP, our goodwill or something. What is it? PP. Goodwill. Intangible asset 50. Their goodwill is not 25. We've changed the value. See the entries here. We've taken their goodwill in the accounting journal entries at 50. So what is our goodwill value? 50. 50. Just a muscle. 50, 50, 100. Okay. We will write one note or we can skip. Yeah. Shall I skip and then write here straight away 1 lakh? Any friends? Yeah. Plus 50. What's after this intangible asset? Then come back to balance sheet. Then we have inventory. Our is 2,50,000. What is their inventory value? 1,57,500. 2,50,000 plus 1,57,500. I'll open one notes to accounts. Huh? Our inventory is 2,50,000. This is 1,57,500. Together 4,07,000. Easy? Any doubt? What's after inventory? Trade receivables. Ours 2 lakh. Theirs it was 1 lakh. It is taken over at 1 lakh. We further create provision of 7,500. Observe here. It is taken over at 1 lakh, but we further create provision of 7,500. So I would write their trade receivables taken over at 1 lakh. I will write my debtors for you. How much is my debtors? 1 lakh. And sorry, 2 lakh. I'll add their debtors 1 lakh. 3 lakh agate. I'll get provision is 7,500 and then make it 292. My debtors 2 lakh. Debtors of transferor 1 lakh taken over at 1 lakh, and then I'll remove provision of 7,500 to make it 92,500. Effectively 7,500 is deducted, make the total debtors come to 292,500. Everyone understood? Then last item, cash and cash equivalent. Ours is 50. Take 50 in the calculator plus. Any payments made in first entry? No. Second entry? Yeah, we've received 20. At 20. 70. Any payment made? No. 70 for the cash. Cash and cash equivalent. How much? 70,000. If you want, you can open one note store. Yeah. Last note. Finishing short. 7. Tala for a reason. 50 plus 20. 7. Understood? Then post 70,000 to balance sheet. Then, is there anything left in the balance sheet? Balance sheet, everything's done. Journal entries, is everything done? No. Business purchase debit 5 lakh 30. Sir, where do we write it? Don't worry. Will it debit 5 lakh 30? It will be credit. Second entry 5 lakh 30 gone. In the first entry, we have liquidators to Vayu Limited. Liability 5 lakh 30 credit. In the third entry, we have liquidators to Vayu Limited 5 lakh 30 debit, and that is also gone. All the entries are also taken care of. All the balance sheet items are also taken care of. Just close your notes to accounts, post them to balance sheet, and see your balance sheet tally. Smile and have happy tears with your balance sheet tally. How much? Yeah, 14 lakh plus 2 lakh 10, 16 lakh 10,000. That is your share capital. I would write 16 lakh 10,000 as note number 1. Shall I go to resource and surplus, which is note number 2? Is something. Come to reserves and surplus note number 2, 20 plus 79. I would write here 20 plus 70, 90. Then long-term providents. What is that long-term provident again? Retirement gratuity fund. Fardodra. 70. LLO 7. LLO. Oh, yellow. No, Jesse. 70. Then all liabilities done. Asset side we have PPE, 450 plus 660. 11 lakh 10,000. I'll write 11 lakh 10,000 PPE. Then intangible asset done. Trade receivables note number 5, inventory note number 6. Double entry. We'll write both of them at a time. Are you ready? Yeah, keep your hands empty. We're gonna lift two items together. Trade receivables 292 500, inventory 4 lakh 7,000. Cash already written. Finished already. Sorry, finish. 292 500 and 4 lakh 7,000. Done. All the notes to accounts have been posted. Now total liability side, everyone. Come on. How much? Very good. Check. Answer side. My God, sorry. Okay. What do we get? 19 lakh? My God, what experience. Okay. Did the balance sheet tally? That, my friend, is amalgamation question in our model text paper number 1. This is like resume in front of the questions that we've done in the past. But that's okay. 14 marker. So they last. Got it? Let's now solve question number 5 from our model test paper number 1. And this question number 5 is on the topic of Accounting Standard 21 consolidation. Let's begin with the question. From the balance sheets and information given below, prepare consolidated balance sheet of Virat and Anushka. Quote. As at 31st of March, they have not given the year. Virat Limited holds 80% of equity shares in Anushka Limited. Then, since its incorporation, ever since Anushka Limited was incorporated, it is subsidiary and Virat is holding. Not 100%, 80%. You get it? So, what do we do with the consolidation? Is there any adjustments? No. They've given balance sheet followed by notes to accounts. You should have picked names, man, differently. Let's start with share capital. Share capital of Virat Limited is 6 lakh. Let's see notes to accounts. Is there any information with regard to this? No, simple. 60,000 shares of rupees 10 each, 6 lakh. This will go as it is into our consolidated balance sheet. In the consolidated balance sheet, under share capital, I will write note number 1. I will take you to note number 1. I'll write there 60,000 equity shares of rupees 10 each, 6 lakh total khatam. There is no adjustment. And this 6 lakh will also appear in our balance sheet exactly the same way. There is no problem whatsoever. What is the next thing? Next we have share capital of Anushka 4 lakh. Share capital of the subsidiary has to be split into holding and minority. Let's do that. 4 lakh rupees. 4 lakh rupees is 40,000 equity shares of rupees 10 each coming to 4 lakh. So let me write in our working note number 1, which is on share capital, which is 40,000 shares of rupees 10 each, 4 lakh. We need to see how much does Virat hold, how much does minority hold. Before we started reading the balance sheet only, they told Virat Limited holds 80%. So 80% is held by Virat, 20% by minority. 80% of 4 lakh, 3 lakh 20, which is 32,000 shares. 20% will be 8,000 shares, which is 80,000. This nominal value of share capital of Anushka, which is held by Virat, will come in the cost of control as nominal value of investment 3 lakh 20. And whatever is held by minority 80,000 will appear in minority interest as share capital 80. I hope everybody got this. What do we have after this? Then let's go back to balance sheet again. In the balance sheet, the next item is reserves and surplus. 1 lakh that of Virat Limited. See the notes to accounts. In notes to accounts, we have general reserve 1 lakh. There is no adjustment whatsoever. I will write this 1 lakh as it is in my balance sheet. Shall I? See, that of holding company need not be adjusted, but that of subsidiary has to be split into pre-post, then between holding minority. I would write this 1 lakh of general reserve here. Come to notes to accounts. I would write here General general reserve, how much? 1 lakh. Now look at the same reserve of Anushka, that is a subsidiary, 1 lakh. This would have to be split into pre and post. But I think it's pretty easy to split it pre and post. You know why? We hold it from the time it is incorporated. And I think this is the first year of incorporation. Is it first year of incorporation? This is first year of business. So because this is first year of business, there is nothing pre. Everything is post. Nothing pre. Everything is. So 1 lakh is post acquisition or revenue reserve. 0 is pre or capital reserve. Or other way is they have not given any information as to how much is pre. So everything is assumed to be post. And it's evident, no, we purchased that company shares from the beginning, from the incorporation. So every rupee of profit earned is after we bought it only. This 1 lakh rupees has to be split between holding and minority. We know holding share is 80%, minority share is 20%. Am I right? Then there is no other reserves. That's the reason I'm closing it now. And there is no revaluation of assets. There is no adjustments whatsoever. So pre will be 0, 0. This 1 lakh post acquisition, 80% will belong to holding, which is 80,000. This will be taken into my revenue reserve, meaning my P&L, basically reserves and surplus in balance sheets, notes to accounts. If it was pre-acquisition reserve, I would have taken it to cost of control and deducted it from book value of investment. Understood? Come on. Let's take this 80,000 to reserves and surplus. In reserves and surplus, below general reserve, I'll write revenue reserve 80,000. Where did I get this from? Where did I get this from? I got this from my subsidiary. Am I right? Then what about the balance of the reserve that belongs to minority? 20,000, which is 1 lakh into 20%, which will be added here to minority. I think actually that's it. There is no changes in minority interest after this. Anyways, we'll keep it open till the end. So come back to balance sheet. We're done with share capital. We're done with reserves and surplus. Third item in the balance sheet is long-term borrowings. They have not given any notes to accounts. So straight away I'll take 2 lakh of Virat, 1 lakh of Anushka together as 3 lakh in my consolidated balance sheet. I'll route it through notes to accounts. I'll write Virat Limited's long-term borrowings 2 lakh, Anushka Limited's long-term borrowings 1 lakh. Putting them together it is 3 lakh. Next item in the balance sheet after long-term borrowings is trade payables. My trade payables, that is of Virat Limited 1 lakh, that of Anushka Limited 1 lakh. Is there any mutual indebtedness? Unrealized profit? Nothing. This is a very simple, sweet, cute problem. 1 lakh plus 1 lakh. So I will write here trade payables. Virat 1 lakh, Anushka 1 lakh, putting it together 2 lakhs. Then we have with us non-current assets PPE. PPE is 4 lakh and 3 lakh. Do we have any revaluation, depreciation? No adjustment. 4 lakh of Virat, then 3 lakh of Anushka, together 7 will become total value. Keep it just like that. We'll post it to balance sheet later. Non-current investments of Virat is 3 lakh 20. This is investment in Anushka. Let's see that note number 3, if there is anything else also involved. So first two notes to accounts are done. Last notes to accounts, shares in Anushka Limited 3 lakh 20. 3 lakh 20 is book value of investments, the value at which it was purchased. This will be taken to cost of control. And in cost of control here, whatever I have as nominal value, which is represented by 32,000 shares of 10 each, will be compared with book value of investments, which is representing asset. If we, on comparison of both of this, if asset is more, it is goodwill. If liability is more, it is capital reserve. Actually, nominal value of investment should be adjusted for bonus issue if there was any, and book value of investment should be adjusted for pre-acquisition dividend and reserves, pre-acquisition reserves if any. But we don't have pre-acquisition reserves, we don't have pre-acquisition dividend. Then book value of investments is how much? 3 lakh 20. There is no pre-acquisition reserves. 3 lakh 20 is the asset. 3 lakh 20 is the liability. There is no goodwill or capital reserve. You can write goodwill, asset or capital reserve. There is no goodwill or capital reserve. If the arising item was goodwill, I would have written it as intangible asset in my balance sheet asset side. If it is capital reserve, I would have posted to reserves and surplus in notes to accounts, which will later go to balance sheet. Anyways, no problem here. What is next after this? Then come back here, inventory. Virat's inventory 1 lakh 60. There is small change in the alignment. Line ಸ್ವಲ್ಪ adjust ಮಾಡ್ಕೊಳ್ಳಿ. Anushka's inventory 2 lakh. Put them together 3 lakh 60. There is no adjustment with regard to unrealized profit here. So come to notes to accounts. Right here inventory of Virat 1 lakh 60, Anushka 2 lakh, together 3 lakh 60. Next, trade receivables. That of Virat 80, that of Anushka 1 lakh 40. There is no adjustments, there is no mutual indebtedness, there is no bills of one party to another, there is no owings from one to another. If it was there, we would have adjusted it from receivables as well as payables. So now let's write in trade receivables Virat 80, Anushka 140, together 220. What do we have after this? Then we have cash and cash equivalent. Virat 40, Anushka 60, putting it together 1 lakh. Virat 40, Anushka 60, putting it together 1 lakh. There are no adjustments. See, everything in the balance sheet I've already marked yellow, meaning it's already considered in my answer. If I come slightly down to my notes to accounts, there are three notes. All the three notes are considered. They have not given any adjustment regarding asset or depreciation, overvaluation, downward valuation, mutual indebtedness, unrealized profit, debenture adjustment, nothing. So what do we do? That's it. Close notes to accounts, put them to balance sheet, see it tally, and then say tan, tan, tan. How much is our share capital? 6 lakh. I think I've already written the same. Then let's write reserves and surplus. How much is total of reserves? 1 lakh 80. Write 1 lakh 80 to balance sheet. Long term borrowings. Before that, minority interest also should be posted, but we'll go by the order. Let's write our long term borrowings. How much is long term borrowings? Long term borrowings 3 lakh. Trade payables 2 lakh. I'll write here long term borrowings 3 lakh. Trade payables note number 4 2 lakh. Got this? Then let's see non-current assets, property, plant and equipment. Note number 5. How much is my PPE? 7 lakh. How much is my inventory? Shall I post two items at once? 7 lakh PPE, inventory 3 lakh 60. Next we need to write trade receivables and cash equivalent. Two items at once. Trade receivables 2 lakh 20, cash and cash equivalent 1 lakh. Trade receivables 2 lakh 20, cash and cash equivalent 1 lakh. Everything's done. Last item, after all these notes to accounts, we have done shareholding for the purpose of identifying cost of control where there was no goodwill or capitalism. Then we moved to general reserve. We analyzed the reserves, apportioned it to minority and holding, and we found minority interest. 80,000 capital, 20,000 reserve. Can I say minority interest 1 lakh? This will go to balance sheet. It should be written as a separate line item after shareholders fund before long term borrowing. How much is it? 1 lakh. Now take the total on the liability side. 6 lakh plus 1 lakh 80 plus 1 lakh plus 3 lakh plus 2 lakh. 13 lakh 80. Check it out on the asset side. 7 lakh plus 3 lakh 60 plus 2 lakh 20 plus 1 lakh. 13 lakh 80. Tan, ta-da! Let's now begin question number 6A from our model test paper number 1. This 6A has two options. You can either write the first one or the second one. And one of it is from chapter 2, one of it is from chapter 3. Sorry, one of it is from chapter 1, one of it is from chapter 2. Chapter 1, Introduction to Accounting Standards. That's the second sub question. And the first question is from chapter 2, which is on framework for preparation of financial statements. To begin with, the question goes like this: what are the qualitative characteristics of financial statements, which improves the usefulness of information furnished therein? So remember, I had given one brain image, one nut to bolt image, and everything. Relevance, understandability, materiality, comparison, understandability, all of that is the answer. Whenever you prepare financial statements, it should be understandable. Meaning, financial statements should be readily understandable by user. When a user looks at that, should be able to understand what that financial statement is trying to tell about the organization. Next point is it should be relevant. The financial statement should not be dump of irrelevant information. It should be containing material information which is important and relevant for decision making. To take decision, that should be required. And what is not required in decision making, it need not be dumped in that financial statement there just like that. Third point is reliability. There is some information given. Why is information given? So that they can take decision. If someone has to take decision based on the information, that information should be trustworthy. I will give you data that can be false. Then what is the point of giving information? So the information given should be reliable. That should be in compliance with the law applicable, statutes applicable, schedules applicable as per Companies Act. It should be in compliance of accounting standards. So only then it will become reliable. And last point is comparable. Comparable means this data, whatever is given, should be comparable with the last year's data of the same entity or with the competitors or industry's data. So intra-firm within the entity comparison should be possible, and inter-firm with the competitor or some other company from the industry also should be able to compare. These are four important characteristics of financial statements, what we already covered in the topic of framework for preparation of financial statements. Chapter might look very small, but it is a very, very relevant topic. Please do chapter quick revision. Video is there on YouTube. Whenever you would want to do, please do revision on this. Don't miss out that capital maintenance, entity not having going concern, and this theory questions also can come. You get it? So, what are the four characteristics of financial statements? Number one, understandability. Number two, relevance. Number three, reliability. Number four, comparability. Understood? Skipping theory will put you at a disadvantage. If you skip theory, you might have to skip entire sixth question. Whereas in sixth one, the next one, what is there, a cash flow statement question is very easy. You will be forced to write a question which will take more time. So don't put yourself at disadvantageous position by skipping theory. Very less, chapter 1, 2, 3. Please do that. Got it? Then we have another second choice question, which is what are the issues with which accounting standards deal? We have it in chapter 1. If you remember, there are three bodies which can issue accounting standards: expert accounting body, other regulatory body, or government. When they issue, what should they cover? It is there in the definition of accounting standards. Accounting standards are written policy documents issued by government, expert accounting body, or other regulatory body covering the aspects of recognition, measurement, presentation, disclosure. What should we recognize? Transactions and events. And once we identify those transactions and events, they should be measured in terms of money, because accounting is all about money measurement. No? If you cannot measure it in terms of money, you cannot pass journal entry, you cannot prepare ledger, no posting to trial balance, no financial statements, no relevance for decision making. So, to record any item in financial statements, it has to be measured in terms of money. So, after recognition, we should know how to measure it. That's where various measurement policies and all will come. So, first identification, that is recognition, to measure it. Third one, presentation. Where should you write it? Is it an expense or it should be capitalized? Is it an expense in P&L or is it an asset in balance sheet? You should learn when to do expense statement, when to do asset treatment. That's what you learn throughout the journey of accounts in so many chapters. So you should learn to recognize the transactions and events. You should learn to measure them in terms of money. Third one, you should know how to present them in financial statements. Last one is disclosure. Any relevant information which can affect decision making of the user has to be disclosed so that the decision taken by the user is not incorrect. If you don't give right information at the right time to the right person, you are responsible for the wrong decision making made by that person. So, as an accountant, our responsibility is throughout to provide the right piece of information at the right point of time to the right person who's the user. So, that's the last point, disclosure. All necessary material information has to be made available for the purpose of decision making. I hope you guys understood. This is the answer to question 6A. Two options, you can write either. Whenever you get a question like this for 4 marks, if possible and time permits, write both. Write both. What if your answer for this is more accurate than this? Then they will give you 4 for this, 3 for this. Whenever they are taking it to total, they'll take the best of. What if you think you know this better? You think you know this also, but you don't know which one is the best of your answers. You don't judge. You write both. Let them judge. Let them, let's say they gave 3 marks for this, 4 marks for this. They will correct both. Put 3, 4. Put an into mark on 3, consider 4 in your total. Only if time permits. Huh? And then don't skip the next question and then write this 4 in detail. No, don't do that. And you don't have to write big paragraphs. Don't think like you're become, okay, 4 marks question means you should write 1 page. Not necessary. One line information is sufficient. You understood? Yeah. I hope you guys got this. Yeah. Let's now solve question 6B from our model test paper number 1. This question is on cash flow statement under direct approach. See, following information is available. Calculate cash flow from operating activities. Summary of cash account is here. What all is available? Balance brought up. We'll ignore. Why? We're not preparing full cash flow. What have they asked? Come to the end. Oh no, in the beginning only. They've asked only operating. Using cash book, if you do operating activities, cash flow statement, it's very easy. Receipt is inflow, payment is outflow. Receipt is debit side, payment is credit side. But check, only take operating items. Ignore financing items and ignore investing items. Shall we do that? Observe. Cash sales. It's operating or not? Yeah, operating. Operating, I'll take a loan. Then trade receivables, money collected from trade receivables, operating. Trade commission received, yes, operating. Then sale of investments, investing. Loan from bank, financing. So ignore these two. Interest and dividend paid. This interest and dividend, sorry, received. Interest and dividend received is investment. This is not operating. So only three inflows: cash sales, trade receivables, trade commission. Shall I write them? Cash sales, 1 lakh 40. Money collected from trade receivables, 1 lakh 75. And we have commission received, trade commission. How much is trade commission received? 50. Inflows done. Now let's see payments, outflow. Cash purchases. Sir, I wonder why did they purchase cash? Hey, cash purchase and cash purchase ಮಾಡೋದಲ್ಲ. They purchased goods and they made payment in cash. ನಗ್ತಾ ಇದ್ದಾರೆ ಮಾನ ಮರಿತಿದ್ದ. Same joke. How many times you tell? Why do you laugh? Yeah. Trade payables. This is also operating outflow. Amount paid towards trade payables. Office and selling expenses, operating outflow. Income tax, operating outflow. Investment, investing outflow. Repayment of loan, financing outflow. Interest on loan, financing outflow. Balance carried on, cash and cash equivalent. Okay. So write this 1, 2, 3, 4. Less item. Okay. Don't forget this will be written as minus. I'll write minus 1 lakh 20 cash purchase. And payment to trade payables minus 1 lakh 57. Then we have office and selling expenses minus 75,000. Then the last one, income tax paid minus 30. Everything's done. Fatafat identify the total cash flow from operating activities. Ta-da! Minus 17,000. Don't write negative cash outflow or not. Write cash flow from operating activities. Write the amount as minus. Easy one. Look at the marks. Yeah, how many marks? 4 marks. Oh my god. Is it? Yes. Come on, guys. Let's now solve question 6C from our model test paper number 1. This question 6C is on the topic of branch accounting. Shall we begin reading the question? See, following is the information of the Jammu branch. The name of the branch is Jammu of West New Delhi. West New Delhi is the name of the company. West New Delhi is the name of the company. This company has a branch in Jammu. For that branch, for the year ending 31st of March 2023, they've given the data. Branch goods are invoiced to the branch at cost plus 20%. Meaning, if the cost is 100, invoice price is 120. Sale price is cost plus 50%. Cost is 100. Invoice price is 120. Selling price is 150. Not 120 ಮೇಲೆ 50% ಅಲ್ಲ. Cost ಮೇಲೆ 50%. So this is very crucial. I will do a cute working note here. Observe. Cost is 100. Invoice price is 20% more than cost, which is 120. Sale price is 50% more than cost, which is 150. Once you write this, the rest of it will be very simple. They would want us to identify the branch profit, the profit earned by the branch. Because they're asking you to identify the profit earned by the branch, prepare trading P&L account. Right? Opening stock, in place of purchase, we'll write goods into branch. Write sales, write closing stock, we'll find GP. Bring the GP down to P&L account, write indirect expenses, find find net profit as balancing figure. But they've asked you one more sub question. Branch stock reserve on unrealized profit. This will be on closing stock. This will be on nothing on opening stock. Opening stock, purchases, closing stock. All the three stock items should be at invoice price. In this trading account and P&L account, opening stock, goods sent to branch, as well as closing stock. All three has to be written at what price? Invoice price. Very important. Did you people understand? Let's begin. So, stock as on 1/4/2022. See, they've asked us to do on 31st of March 23. So, 1/4/22 is opening stock. How much is opening stock? 2 lakh 20. I'll finish my cute working note first and only then put items to my trading and P&L. Oh, so opening stock at invoice price is 2 lakh 20. You understood? Very nice. Then we have goods sent to branch at invoice price is 11 lakh. What is the value of the goods sent to branch? Goods sent to branch at invoice price is 11 lakh. Then they've told sales during the year 12 lakh. This sales 12 lakh is its selling price. Is at what price? So I can identify the invoice price for this and then I can identify the profit also. See, if it is 150 rupees for 12 lakh, how much is it for 120? What is the invoice price of goods sold? Very easy. 12 lakh into 120 divided by 150. What do we get? So 9 lakh 60 is the invoice price of these goods. 12 lakh is the sale price of this book. Sir, why did you find the sale price, sales invoice price? Closing stock 40 lakh 100. Sales quota, they have given indirect expenses as 45. Where will this indirect expense appear? In your P&L account, debit side, you will write expenses 45,000. See, in your trading account, you have to write opening stock. Am I right? I told you, opening stock, goods sent to branch and closing stock should be at invoice price. Opening stock, we know how much. Opening stock 2 lakh 20. Goods received from head office 11 lakh. Sales 12 lakh is sale price. See, I know opening stock 2 lakh 20. Goods received from head office 11 lakh. These two are at what price? Invoice price. Sales will be at sale price. I should write closing stock. No, I don't know closing stock. I don't know. Have I sold everything? No. I should find closing stock. How do I find? Very easy. I know opening stock at invoice price. I know goods received at invoice price. So I had 2 lakh 20,000 worth of inventory at my branch. I received 11 lakh invoice price worth of stock from head office. Together, stock is 13 lakh 20. Do you all agree? In 13 lakh 20,000 worth of stock, no, 9 lakh 60,000 worth of stock is sold. Do 13 lakh 20 minus 9 lakh 60? 3 lakh 60 worth of inventory still there in the godown. Opening plus goods received minus sales. 3 lakh 60, my friend, 3 lakh 60. See, opening stock plus goods received from head office minus sales. 3 lakh 60 is invoice price. I told you in trading account, opening stock, goods received, and closing stock should be at what price? At 3 lakh 60. Bharat, you can find GP as balancing. Here the total is 15 lakh 60. 15 lakh 60 minus 13 lakh 20 is how much? 2 lakh. GP is carried down from trading to P&L. 2 lakh 40. In 2 lakh 40, 45,000 is indirect expense. Can be direct also. I don't know. I've assumed it to be indirect. Sir, can I assume it to be direct? Hard, but trading account. No one is going to question you. Yeah. How much is net profit? 240 minus 43. 1 lakh. Simple, no? They have not stopped here. First sub question is gross profit. Oh, sorry, net profit. They've not told gross and net, they've told profit earned by the branch. How much? 195. Second sub question that they've asked is branch stock reserve in respect of unrealized profit. This closing stock is there, no? It is recorded at what price? 3 lakh 60. This 360 closing stock at branch will be recorded in head office P&L. So head office balance sheet as stock, but head office cost is not 3 lakh 60. 3 lakh 60 is invoice price. So head office cost will be how much? 360 into 100 divided by 120. 360 into 100 divided by 120. 3 lakh. Everyone understood 3 lakh? 3 lakh rupees worth of inventory for head office, but it is at invoice price of 3 lakh 60. In the branch, the closing stock is 3 lakh 60. Branch stock is held by holding only, no? Holding, sorry, that head office should include that stock in their books of accounts. When they include it at 3 lakh 60, they're increasing the value of the inventory by 60,000. Am I right? So it is called unrealized profit. Stock is not sold, ownership is not transferred, but the inventory value is increased. That is called unrealized profit. I need to create stock reserve for that. In whose books? Head office. Head office, not branch. Head office. Remember final accounts method. There's a detailed revision video on branch accounting in 2 parts on YouTube. Please do revise it if in case you find any part difficult. And here 3 lakh 60,000 into 20 by 120. 60,000 is the unrealized profit. Stock reserve to be created on the closing stock by the head office in its books when it includes 3 lakh 60,000 worth of closing inventory in the branch into head office accounts. Did everyone understand this branch accounting question? Fantastic. And that's solution to question 6C from our model test paper number 1.